Okay. Good morning, friends. Now today,
Sir, 1 minute. One friend has posted PPT not available. PPT also we will collect and upload, sir.
yes, this evening I will give.
We are posting whatever question papers are shared by sir. All other PPTs we will share subsequently.
Okay. Today evening I will give the PPT for today's class.
Okay, sir.
Good morning, friends. It's around 10 o'clock now. So as I told you yesterday, we will be concluding the class at 1 o'clock. Today we are going to discuss there is IRACP norms and the recovery. So the relevant HO circular for this is loan recovery policy of the bank, HO circular 147/2022. So during the course of the discussion, we are going to see the SMA accounts, and then what is the provisioning norm. So with regard to various types of advances, whether it is NPA, under NPA, we have substandard, doubtful, loss asset, and even for standard asset, we have provisions. All those things we are going to discuss. Then we'll be seeing that is the empanelment of the recovery agents as well as resolution agents. What is the policy of the bank on that? And then what is the remuneration we have to pay to those agents and all we will see. Then if time permits, we'll be taking up the SARFAESI action. So SARFAESI Act, and then the relevant guidelines for with regard to SARFAESI Act. Finally, that is next class, we'll be taking up the OTS policy of the bank. The general OTS policy of the bank is told in HO Circular 147/2022, and then special OTS schemes. 148, 149, 50, the three circulars are there. So last time there are a lot of questions were there in this, wherever there is a policy, big policy is there, no? So that is 6-7 questions we can expect. So depending upon the levels, the policy questions also will be, the difficultness of the questions also will vary. So we are starting the session now. Regarding that is NPA recovery. So special mention accounts. So as per Reserve Bank of India, all of us are known, there are 3 categories of special mention accounts. SMA stands for special mention account 0, special mention account 1, and special mention account 2. So when there is an overdue in an account for 1 to 30 days, when the overdue starts from 1 to 30 days, when the overdue continues beyond than up to 30 days, the account will be classified as, will be called as SMA 0. SMA account category SMA 0 as per Reserve Bank of India guidelines. And then if the overdue is beyond 31 days and 60 days, continues the account, so we call it as SMA 1. And if the overdue goes beyond 61 days up to 90 days, the account will be called as SMA 2. And beyond 90 days, so the account will be classified as NPA. All of us are aware. So this concept of SMA 0, SMA 1, and SMA 2 is for term loans. So with regard to OD/OCC accounts, we don't have a concept called SMA 0. We have a concept called only SMA 1 and SMA 2. So the term loans will have SMA 0, SMA 1, and SMA 2. Coming to OD/OCC accounts, running accounts, if liability continues to be more than the limit for continuously more than 30 days, straight away it will be classified as SMA 1. So there is no, suppose if the liability continues to be more than the limit for 1 day up to 30 days, the OD/OCC accounts will not appear in SMA category 0. Straight away for OD/OCC accounts, they start appearing in SMA 1 when the overdue, that is when the liability is more than the limit for more than 30 days only, straight away they will go to SMA 1 only. So this is with regard to for OD/OCC accounts, if liability is more than the limit continuously for more than 30 days, to be reported as SMA 1. SMA 0 is not applicable to OD/OCC accounts. Okay, sir. Next slide we'll see. Okay. So the SMA accounts, the SMA accounts are exclusively for overdue purpose. So banks have to report the accounts as SMA 0 or SMA 1 as SMA 2 to Reserve Bank of India only if there are overdues in the account. For example, if there are no overdues in the account, still stock statement is not updated beyond 30 days, or limit is not renewed beyond 30 days. So these things need not be reported to Reserve Bank of India as SMA. Only wherever there are overdues, these accounts have to be reported depending upon the number of days of overdue, either as SMA 0, SMA 1, SMA 2. If there are no overdues, if other non-financial parameters are there, these accounts need not be submitted as SMA to Reserve Bank of India. However, for internal purpose, we used to take those reports also and follow up with the parties with regard to updating their stock statement or renewal of the limit. So SMA accounts exclusively for overdue purpose only. Delinquency due to non-financial parameters or due to agriculture crop loans, any agriculture crop loans overdues are there, stock loans and VSLs need not be reported in SMA to Reserve Bank of India. However, we have separate follow-up mechanism for these types of accounts. Okay, sir? Then we have a concept called the CRILC. So the expansion for CRILC is Central Repository of Information on Large Credit, CREDIT. I have made the mistake over here. So the CRILC, we call it as CRILC, Central Repository of Information on Large Credit. It is a public domain. This site is available in the Reserve Bank of India. Okay. So all the banks have to submit the details about all accounts of borrowers with exposure of rupees 5 crores and above to be reported to Central Repository of Information on Large Credit monthly last date. So whenever a party is having an exposure of more than 5 crores, either in single account or all accounts put together, the details about the party, whether it is a standard account, whether it is SMA 0, SMA 1, SMA 2, or it is an NPA account, all the details have to be submitted to CRILC every month as on the last day of the month. For all the banks, they have to report to Reserve Bank of India. Then besides that, there is a weekly report also to be submitted to Reserve Bank of India as on, that is a Friday of every week. So in the monthly report, what you will submit? Details about 5 crores and above exposure, whether it is a standard asset or NPA, SMA 0, SMA 1, SMA 2, details to be submitted. But in the case of a weekly report, what we will submit? For example, so the days default, what we will submit is the weekly report, defaulting borrowers and borrowers out of default. For example, from the previous Saturday to this Friday. So in the previous Saturday, if any account was having overdue, SMA 0, SMA 1 or SMA 2, and during this week, the overdues have come out. So that is, party has cleared the overdue. So those details to be furnished borrowers out of default. And during last Saturday, there was no overdue in this account, parties of exposure of 5 crores and above. But during the course of the week, overdue started in this account. We call it as defaulting borrowers. So Central Repository of Information on Large Credit, exposure of 5 crores and above parties to be reported monthly last day. That is one report. It contains whether accounts are SMA, SMA 0, 1, 2, 3 or NPA or standard assets. And coming to, there are accounts which may not have overdue in the last Saturday. Then from last Saturday to this Friday, the accounts would have started showing overdue. So that has to be reported on the weekly report as at the end of Friday. Similarly, last Saturday, the accounts would have having some overdue, but during the course of the week, party would have paid the overdue. So this we have to report in, that is borrowers out of default. So CRILC report is monthly last day as well as on Friday. Okay. Then that is with regard to reporting SMA 0, SMA 1, SMA 2, and then to CRILC the details of Reserve Bank of India. Now in Canara Bank, we have classified the SMA accounts as SMA A, SMA B, SMA C, SMA D, SMA E, that is SMA non-financial, SMA agriculture, SMA staff, and SMA DSL. Wherever the account started showing overdue, even 1 day overdue, so we are classifying those accounts as SMA, and SMA 0, SMA 1, SMA 2, we are reporting to Reserve Bank of India for internal purpose. Wherever a party's exposure is less than 5 lakhs, if any of the accounts started showing overdue, either SMA 0 or SMA 1, SMA 2, we bring all those accounts under S category SMA A. And then similarly, if the exposure to a party is 5 lakhs and above less than 25 lakhs, if the accounts is having overdue, we bring them under SMA B. Like that, 25 lakhs to less than 100 lakhs, 100 lakhs and above less than 500 lakhs, 500 lakhs and above we are having. Why different types of exposure? The follow-up mechanism will be different for different types of exposure. That is, for Reserve Bank of India, we are reporting, and for our internal purpose, we are classified the accounts as SMA A, B, C, D, and E. And then non-financial. So for non-financial parameters, we need not report to Reserve Bank of India. But here, if an account stock statement is not submitted, if you generate SMA NF non-financial, you will get which are all the accounts where stock statement not submitted for more than 30 days. Like that, you will get for agriculture crop loans. Then SMA stock, wherever overdues are there, SMA BSL, but these things need not be reported to Reserve Bank of India. Then special mention accounts, follow-up of SMA accounts. Okay, then who has to follow up as per your loan recovery policy or credit review and monitoring policy? That also you should note it down, friends. HO Circular 278/2022. That circular talks about the SMA, follow-up of SMA, etc., credit review and monitoring policy. In fact, the credit review and monitoring policy will be taken up by some other faculty. But to go for NPA, this is the basic. That is why few points from there I am touching. HO Circular 278/2022. So SMA accounts with exposure of 25 lakhs and above, this the follow-up is given to the RO head. Other RO executives, SMA accounts of less than 25 lakhs. Then circle head, SMA accounts of 100 lakhs and above, it is under their follow-up. And CGM, GM credit monitoring being all SMA accounts of 500 lakhs and above. HO credit administration and monitoring wing, that is CAM wing means credit administration and monitoring wing, all SMA accounts of 500 lakhs and above. I told you, no, SMA A, SMA B, C, D, like that you are having. So the follow-up is depending upon various authorities, the follow-up are given to them depending upon, for example, you see 500 lakhs and above SMA, that is accounts, no, that will be followed up by HO credit administration and monitoring wing. Okay, then in an account, if an account appears continuously in SMA2, so SMA2, it continuously appears, only the party pays a critical amount in the last minute so that you are avoiding the account slipping to NPA. So that is a quarterly note on SMA2 accounts which appear throughout the quarter in SMA2. For example, you take April to June. In the month of April, it is in SMA2. In the month of May also, it is in SMA2. In the month of June also, it is in SMA2. That means what? 1 month arrears only the party is paying. That is a critical amount. Those types of accounts, a note has to be placed to the respective authorities by the concerned wings. For example, if the exposure to a party is 25 crores and above, 25, that is 2,500 lakhs and above, if this type of accounts appear continuously for 3 months in a quarter as SMA2, the note has to be placed to executive director overseeing stressed asset management wing, SMA wing. Suppose if it is 500 lakhs and above, below 25 crores or 2,500 lakhs, it has to be placed before the executive director overseeing credit administration and monitoring wing. If it is 100 lakhs and above exposure below 500 lakhs, it has to be placed to circle head. 10 lakhs and above below 100 lakhs, it has to be placed to RO head. So when an SMA account continuously appears in SMA2 in a quarter throughout the quarter, then these accounts to be placed for follow-up purpose to the appropriate authority in the bank. Why these accounts are appearing continuously in SMA2? Why party is paying only the critical amount in the last minute? Is there any possibility the account is slipping to NPA? Okay, sir. Now, then, so let us leave it. Let us leave all those things. Now let us go to the question, sir. Let us go to the question. You will get an idea when we discuss the questions now. Say, when the overdue in a term loan account is more than 30 days and up to 60 days, it is classified. So when the overdue in a term loan account is more than 30 days and up to 60 days, it is classified as SMA0, SMA1, SMA2 or special watch list account. So I told you SMA term loan, again you repeat that first slide you remember, term loan. Yes, overdues 1 to 30 days, it is SMA 0. Overdues to 31 to 60 days, it is SMA 2. So the question is overdues more than 30 days and up to 60 days, it is a term loan. It will be classified as SMA 1. Question number 1, answer is B. Question number 2, the due date of a term loan is 31st March 2022. Before the day-end process of 31st March 2022, the full dues are not recovered from the party. From which date this account will be classified as SMA 0. See, what is SMA 0 in a term loan? Overdues are from 1 to 30 days. Now, for example, a party has to pay an EMI on 31st March 2022. Let us assume he has to pay 2,500 rupees. Before the day end process of 31st March 2022, so today it is due. He has to pay today. There is no overdue still today. Today he has to pay the money, 2,500. Till the day end process of 31st March 2022, if the party does not pay the money, when the day end process is running, the account will be classified as SMA 0. See, the due date of the term loan is 31st March 2022. Before the day end process of 31st March 2022, if the full due overdues are not recovered, from which date this account will be classified as SMA 0 from 31st March 2022, not from 1st April. So if the due is today, if the full dues are not paid today, from that on the day end process of 31st March 2022, the account will, as per system, the account has to be classified as SMA 0, having overdues of 1 day. That is the first day overdue starts on 31st March 2022. When this above account, so first 31st March 2022 is 1 day overdue, it is a term loan. When the above account will be classified as NPA if the overdues are not recovered. We will go to the PowerPoint presentation, then we will come here. Friends, we'll go to the PowerPoint presentation, then we'll come here. Here I want to tell you. So then we'll go to the previous slides, we'll go. So what is NPA? The concept of NPA definition is different for term loan, different for OD OCC accounts, and different for agricultural loans. You should know. Okay, so an asset will become a non-performing when it ceases to generate income for the bank. A non-performing asset is a loan or advance. See, that is interest and or installment of the principal, either interest or installment or both. If interest and or installment of principal remain overdue for a period of more than 90 days in respect of a term loan. See, up to 90 days, if there are overdues in a term loan account, the account will not be classified as NPA. Either they'll be classified as SMA 0, SMA 1, SMA 2. Beyond 90 days, so on the 91st day only, still if overdues are there, at the day end of 91st day, a term loan will be classified as NPA. So you should know, interest and or installments of principal remain overdue for a period of more than 90 days in respect of a term loan. The account will be classified as NPA. Coming to OD OCC account. The OD OCC accounts, the NPA OD OCC accounts are called out of order accounts. See, suppose in respect of an OD OCC account, the account remains out of order in respect of an overdraft or cash credit account. All out of order accounts are NPAs. So with regard to OD OCC, the accounts has to be classified as NPA, and when they have to be classified as NPA, and what do you mean by out of order? Next slide will give a clear idea. You go through the slide, I will explain. An OD OCC account will be treated as an out of order when if the outstanding balance, that is the liability, if the outstanding balance remains continuously in excess of the sanctioned limit or drawing power. Okay, if the outstanding balance, that is a liability, continues to be more than the limit or drawing power for 90 days. So liability is more than the limit or drawing power continuously for 90 days. At the end of the 90th day, the account will become NPA. In the case of a term loan, more than 90 days. In the case of an OD/OCC account, if liability continues to be more than the limit or drawing power for 90 days, at the end of the 90th day, an OD/OCC account will become NPA. This is one type of out of order. Out of order in OD/OCC account means NPA. There is another reason, another two reasons for which an OD/OCC account will become NPA at the end of the 90th day. Though the outstanding balance in the account, though the outstanding balance in the account is less than the sanctioned limit drawing power. So liability is not more than the limit. Liability continues to be less than the limit, but there are no credits continuously for 90 days dormancy. So liability is less than the limit. There is possibility, no, liability less than the limit. Even though the liability is less than the limit, but there are not even a single rupee credit in the account continuously for 90 days. At the end of the 90th day, the account will become out of order. Out of order means NPA. The account will become NPA. One more reason. So though there are credits, the first point is liability is more than the limit. Okay, TOD overline. We call it as TOD overline. Liability is more than the limit continuously for 90 days. At the end of the 90th day, because of this reason, the account will slip to out of order. We call it as NPA. Secondary reason, liability is less than the limit, but there are not even a single rupee credit in the account continuously for 90 days due to dormancy. At the end of the 90th day, the account will slip to NPA. The third possibility, liability is less than the limit. Liability is not more than the limit. Liability is less than the limit, but there are credits in the account. This point is there are no credits in the account. But here there are credits in the account, but the credits are not sufficient to cover the interest debited during the previous 90 days. I will show an example now, we will understand. See again, I repeat. An OD/OCC account will be slipped to NPA due to three reasons. If the liability continues to be more than the limit for 90 days, at the end of the 90th day, the account will slip to NPA. Then liability is less than the limit. In spite of liability is less than the limit, there are continuously no credits in the account for 90 days. At the end of the 90th day, the account will slip to NPA. And the third possibility, that is, there are credits, but the credits are not sufficient to cover the interest debited during the previous 90 days. The account will slip to NPA at the end of the 90th day. So the three reasons for which OD/OCC account slips to NPA I explained. And please understand, term loan will slip to NPA when the overdues are more than 90 days. OD/OCC accounts will slip to NPA when any one of the thing or any of the thing takes place at the end of the 90th day. Okay, here for example, I will give I told when the liability is less than the limit, but there are credits are there, but the credits are not sufficient to recover the interest debited to the previous 90 days. The account will slip to NPA at the end of the 90th day. See, for example, as on 13/7/2022, we have taken a OD/OCC account. Liability limit or DP, let's assume it is 10 lakhs. The liability is only 5 lakhs. The liability is only 5 lakhs. So interest debited in the account on 30, the OD/OCC account, last day the interest will be debited. On 30th April, interest debited 4,200. Interest debited on 31st May is 4,400. Interest debited on 30th June, 4,500. We are on 13/7/2022. In the month of April, you got a credit of 4,000 rupees in the account on 15/4/2022. In the month of May, you got a credit of 8,000 on 15/5/2022. In the month of June, as well as up to 13/7/2022, there are no credits in the account. So we have to see, that is 13th July today, in the previous 90 days, including today. So we have to see, as on 13/7, previous 90 days, including 13th July, what is the interest debited in the account? Previous 90 days, including 13th July. So From 15/4/2022 till 13th July 2022, if you calculate, you will get 90 days in the calendar. From 15/4/2022 till 13th July 2022 is the 90 days. Okay. 15/4 to 19, that is 2022, that is 13/7, 90 days. April, you have 16 days. May, 31 days. June, 30. July, 13. Totally, you will get 90 days. During these 90 days, what is the interest debit in this account? Interest debit during the 30 days from 15/4. 34, you have an interest debit. 31/5, you have an interest debit. 36, you have an interest debit. You have an interest debit in the previous 90 days, including today, 13,100. What is the credit in this from that is 15/4 in this account? You have a credit of only 12,000. So there is an insufficient credit. Interest debited during the previous 90 days as on day is not recovered from the party. So even though the liability is less than the limit is 10 lakhs, liability is 5 lakhs. So the interest debited in the account in the previous 90 days is not fully recovered in the account. As at the end of the 90th day, the account will slip to NPA. So these three accounts are called out of order accounts. Okay, sir? Then similarly, then in the so another reason. So one reason is out of order account slipping to NPA. So where liability is more than the limit, then liability is less than the limit, but there are no credits continuously in the 90 days. And the third point is liability is less than the limit, but there are credits. Credits are not sufficient to cover the interest debited on the 90 days. On the 90th day, the account will slip to NPA. There are due to non-finance, these things are overdues. Due to non-financial parameter also, an OD/OCC account will slip to NPA. What are all the reasons? Irregular, there is a concept called irregular OD/OCC accounts. What do you mean by irregular OD/OCC account? If stock statement is not submitted for more than 3 months from the due date, and hence the drawing power calculated from the stock statement is older than 3 months, it is called an irregular OD/OCC account. It is not NPA. So stock statement not submitted for more than 3 months. The drawing power you have calculated is only more than 3 months old. This account is called irregular OD/OCC account. If this irregularity continues for 90 days beyond these 3 months, totally 6 months, sir. Stock statement not submitted for the month of January, the account will not slip to NPA in the month of April. The account will slip to NPA in the month of June only. So first 3 months, if the stock statement is not submitted from the due date, it is not an NPA account. It is an irregular OD/OCC. If you ask the question, you should not miss what is an irregular OD/OCC account. If stock statement is not submitted for more than 3 months from the due date, and hence the drawing power calculated from the stock statement is older than 3 months, it is called an irregular OD/OCC account. Irregular OD/OCC is not an NPA. If this irregularity continues for another 90 days from the end of the third month, it is called an NPA. That is totally 6 months is required for an OD/OCC account to slip to NPA due to non-submission of stock statement only. Then, in nutshell, if stock statement is not submitted within 180 days from the due date, and hence DP arrived is more than 90 days old, the account has to be classified as the end of 180th day as NPA. Then similarly, an OD/OCC account where the limits have not been renewed within 180 days, limits are not renewed within 180 days from the due date, it will be treated as NPA. So OD/OCC account out of order. 3 reasons for out of order. Liability more than the limit continuously for 90 days. At the end of the 90th day, the account will slip to NPA or out of order. Liability is less than the limit, but there are no credits continuously for 90 days in the account. At the end of the 90th day, the account will slip to NPA out of order. Third reason, liability is less than the limit. There are credits, but the credits are not insufficient credits to recover the interest debited during the previous 90 days. At the end of the 90th day, the account will slip to NPA. OD/OCC accounts due to non-submission of non-updation of the DP also will slip to NPA. That is at the end of the 180th day. At the end of 90th day, it will be called as an irregular. Then another 90 days, it will become NPA. That is another reason OD/OCC account slipping to NPA if the renewal of the limit is not taken place within 180 days from the due date, the account will slip to NPA. Okay, sir. Good. Now, agriculture. So agriculture, you already know the installment of principal or interest thereon remains overdue for 2 crop seasons for short duration crops, and then for long duration crops, it is 1 crop season. Already you know. But if you are classifying some agriculture advance like a term loan, you are classifying some agriculture advance so like term loan, but for your poultry or whatever you say, in those cases, it is like term loan. So when you are linking that is repayment with regard to the crop season, short duration on long duration crop. And if you are giving some agriculture loan and under some product codes, you are classifying like a term loan. So where there is certain codes are there, in that case, more than 91 days term loan overdue, the account will slip to NPA. Okay, sir. Now, before going to this slide, we will see the questions now. You will understand. So these questions are given to you only to get a confidence. The possibility is different types of questions also asked. That is why I'm discussing in the class. For example, you see. Now, so question number 1 we have seen. Question number 2 also we have seen. For what question number 1? So more than 30 days up to 90 days term loan, it is SMA 1. Question number 1 answer is B. Question number 2, so that is the account term loan due on 31st March. At the end of the 31st March, if it is not recovered, the first day overdue, SMA 0, it will start on 31st March, not on 1st April. So question number 2 answer is A. The next question is, that is, if the overdue continues, this term loan will become NPA on which day? So 31st March is the first day overdue. So I told you with regard to term loan, if the overdue continues beyond 90 days, at the end of the 91st day, the account will slip to NPA. Now you see the PowerPoint presentation, you will understand the concept. Say, I told you, so SMA 0 on 31st March 2022, because dues on 31st March, the party has not paid the full dues. So at the end of the 31st March 2022, it will be classified as SMA 0, 1 day overdue. So 1 day overdue starts on 31st. For 30 days, it will be in SMA 0. So that is from 31st March to 29th April, 30 days. So from 31st March to 29th April, the account will be in SMA 0. Then it will slip to SMA 1 from 30th April, and it will remain there for another 30 days, that is till 29th May. From 30th April to 29th May, you have 30 days time. So this is SMA 0, more than 60 days, sorry, more than 30 days up to 60 days. Then that is, it will go to SMA 2 on May 30th. More than 60 days up to 90 days, including 90 days, it will be in SMA 2. That is May 30th to 28th June. So on 91st day only, friends, please understand, a term loan will slip to NPA beyond 90 days on the 91st day only. Whereas a OD/OCC account will slip to NPA for any reason at the end of the 90th day. For OD non-renewal of limit at the end of the 180th day. And then similarly, the other one, no stock statement not submitted at the end of the 180th day. But a term loan will slip to NPA at the end of the 91st day only, more than 90 days. So this term loan, if the term loan started overdue on 31st March, first day overdue starts there, and the 90th overdue will end on 29th June. The 91st day, the overdue continues. At the end of the 91st day, that is June 29, the account will slip to NPA. Let's see the question now. You'll understand. Okay, when the above account will be classified as NPA if the overdues are not recovered. Question number 3, answer is C, on 29th June 2022. How we arrived it, I showed you by means of a PowerPoint presentation. These things are there in your HO circulars. Okay, so in your credit review and monitoring policy and your websites, these examples are there. Please go through it. So for question number 3, answer is B. Question number 4, question number 3, answer is B. Question number 4. We are seeing question number 4 now. 1 minute. Okay. And OCC, see, you read that question. A OCC account will be classified as SMA 0 if outstanding balance remains continuously in excess of the sanctioned limits or drawing power, whichever is less between 1 day to 30 days, 31 days to 60 days, 61 days to 90 days, none of these. Friends, I told you there is no concept of called the SMA 0 for OD OCC accounts. SMA, that is OD OCC accounts, if the overdues are more than 30 days, it will be straight away classified as SMA 1 only. The question is, and when OCC account will be classified as SMA 0. You should not write as 1 to 30 days. The SMA 0, 1 to 30 days overdue is applicable only for term loan. So answer is none of these. Question number 4, answer is D. D is none of these. Question number 5. See, question number 5, you see. What is an out of order advance as per RBI notification dated 17th November 2021? I told you, 3 reasons. That is out of order advance. The outstanding balance in OD OCC account remains continuously in excess of the sanctioned limit drawing power for 90 days. At the end of the 90th day, the account will slip to NPA out of order. The outstanding balance in the CC account is less than the sanction limit, but there are no credits continuously for 90 days, dormancy. At the end of the 90th day, the account will slip to NPA. The outstanding balance in the ODOCC account is less than the sanction limit, but credits are there, but the credits are not enough to cover the interest debited during the previous 90 days period. At the end of the 90th day, the account will slip to NPA. What is an out of order? Either 1 or 2 or 3, anything, all the 3 or any one of them or any 2 of them, they are called out of order. Question number 5, answer is E. Question number 5, your answer should be E. Question number 6. Sorry. Question number 6, let us see. As on 13/7/2022, and question number 13 we are seeing, as on 13/7/2022, an OCC account with limit of 10 lakhs had a liability of rupees 5 lakhs. Interest debited on 30th April 2022 was 4,200. On 31st May, it was 4,400. And on 30th June, it was 4,500. Credits in the account on 15th April, 4,000. And on 15th May, it is 8,000. This account will become out of order on which date for insufficient credit in the previous 90 days. The same table I showed you, I have given in the form of a question, that's all. So liability, limit, interest debited on 13th July. On 13th July, what is this question? On 13/7. On 13/7, if you see the previous 90 days, including the 13/7, the credits are this much. The credits, the debits or interest debit is 13,100. The credits are only 12,000. So the account will slip to NPA on 13th July evening day end for the reason insufficient credit in the account continuously in the previous 90 days. Okay, sir, I already shown you the slide, so I need not explain. So on which date the account will become NPA due to out of order insufficient credit? On 13th July. If they give an example and ask anything, you should not miss it. These things are available in the Credit Administration on Monitoring Wing website as classification and examples. So question number 6, answer is on 13th July 2022. Question number 7. Question number 7, it is available before you. What is an odd man out? Odd man out means what is wrong. That's all. Which is irrelevant. To understand odd man out, few statements are correct. One statement is a wrong statement. That you have to pick up as odd man out. If none of them are odd man out, you have to tell none of these. If all of them are odd man out, you have to tell all of them. Okay, sir. So what is an odd man out? All out of order advances are NPAs. Correct. It is not an odd man out. All out of order advances with respect to OD OCC, the concept of out of order is applicable only for OD OCC accounts. It is not applicable for term loan. So all out of order advances are NPAs. Correct. It is not an odd man out. Point number 2, if stock statement is not submitted for more than 3 months from the due date, the account is called the irregular account. Yes, that is also correct. I explained to you, Then point number C, a term loan will become NPA if interest and installment is overdue for more than 90 days. Correct. Either interest or installment or both of them are overdue for more than 90 days only, a term loan will be classified as NPA. Point number C, a OD OCC account will become NPA if outstanding balance continuously in excess of the drawing power, TOD overline or limit for more than 90 days. This is odd man out. What's the correct sentence? It should be an OD OCC account will become NPA if outstanding balance continuously is in excess of the drawing power or limit for 90 days, not for more than 90 days. So for OD OCC account, it is only 90 days. So which is an odd man out? C is the odd man out. C is wrong. When there is an answer is wrong, you should know what is the correct answer. For 90 days, not for more than 90 days. Question number 7, answer is C. So when the answer is wrong, you should know the correct answer, because if they give correct answer in C, then you have to tick none of these. Okay, for not more than 90 days, for 90 days. Question number 7, answer is C. Question number 8. All SMA accounts are standard asset, NPA, substandard asset, that is doubtful assets. What is SMA? Accounts having overdues. They are all SMA, isn't it? So these accounts are not NPAs. So they are not special, that is substandard accounts. They are not doubtful advances. They are all standard assets only. Beyond 90 days in a term loan overdues, then it will become NPA. At the end of the 90th day, there are overdues in ODOCC account, it will become NPA. So all SMA accounts are standard asset. So question number 8, answer is A. Question number 9. The cutoff limit for borrowed accounts to be reported to Central Repository of Information of Large Credit. Rupees 5 crores and above, rupees 3 crores and above rupees 5 crores, above rupees 3 crores, rupees 5 crores and above. Okay. So cutoff limit for reporting to Central Repository of Information on Large Credit, I told you weekly report and monthly report. So it is 5 crores and above. Question number 9, answer is A. Then question number 10. What is the periodicity of submission of data to CRILC? Monthly, weekly, bi-monthly, A and B. So monthly, you know, all the details to be given. Weekly, accounts which are started showing default, and which accounts which are come out of default from the last Saturday to this Friday. So question number 10, answer is D. Question number 10, answer is D. Both monthly and weekly. Question number 11. For the purpose of internal follow-up of SME, that is a follow-up, SME includes accounts with exposure of rupees dash lakhs and above. I will given no for follow-up of internal accounts. SME means accounts of 500 lakhs and above. So for purpose of, so you should also know in the bank what is internal SMA A, SMA B, C, D, etc. 500 lakhs and above is called SME accounts in Canara Bank for follow-up of internal. This need not be the same in some other bank. So for the purpose of internal follow-up of SMA, E includes accounts with exposure of rupees 500 lakhs and above. Question number 11, your answer should be C. Question number 12. These are all straight questions, no problem. Question number 12. If an account with exposure of 25 crores and above appears in SMA2 continuously in a quarter, a note to be placed to whom at the end of the quarter. I showed you the table, no? 2,500 lakhs and above continuously in all the days in the last quarter. At the end of the quarter, continuously, if it is SMA2, at the end of the quarter, a note has to be placed before to whom? Executive Director overseeing stressed asset management wing. If it is above 500 lakhs up to 25 crores, then ED overseeing credit administration wing. These are no. So for this question, so question number 12, answer should be A. Question number 12, answer is A. Then question number 13. Substandard assets are classified into how many categories? Friends, the first few questions, maybe questions number up to 12, we saw that is beginning for your NPA. So we saw the basis. So when the account will slip to NPA, when a term loan will slip to NPA, what is the concept of out of order? What is the concept of SMA for the Reserve Bank of India submission and for your internal follow-up? Okay, those things in detail we saw. Now we are going over to NPA. So, you know, non-performing assets are classified as, that is substandard advances. Then we have doubtful asset. Then we have loss asset. 3 categories are that. So when an account slips to NPA, 90 days overdue. When an account slips to NPA, OD/OCC, term loan beyond 91 days. When an account slips to NPA, to what category it will go? So all of us are having an impression that when an account slips to NPA, necessarily it has to go to substandard. Then after staying in the substandard for 12 months, we are under the impression it will go to doubtful asset 1. Then it will go to doubtful more than 1 up to 3. Then doubtful more than 3. Okay, but that is the normal scenario, normal sequence of NPA accounts. But there are certain accounts, when they slip to NPA, straight away you can classify them as loss asset. They need not pass through substandard. They need not pass through doubtful asset category. Similarly, there are certain advances. When they slip to NPA, they will straight away go to doubtful first year. They need not pass through your substandard account category. Now we are going to see that slide. So when an account slips to NPA, to which category it will belong to. When it goes to that category, in which how many months that will stay in this category, then what is the provision for those categories? And we are going to see 4-5 examples with a PowerPoint presentation. If the account slips to NPA, what is the provision on this particular month, etc., etc. We are going to see. Now we are starting question number 13. Before going to the question number 13, I am going to explain with regard to NPA, which category it will go, whether substandard or loss or doubtful, or which account will go to substandard, etc. We are going to see the presentation. So please concentrate on the presentation. You are all capable. You will understand it very quickly. Okay, but little concentration required. 5 minutes concentration, you will understand. All of you are knowledgeable people. Account classification, asset classification, that is secured. There are what with regard to classification of an account into NPA. So the assets are classified into secured asset and unsecured asset, secured advance and unsecured advance. We are going to see what is a secured advance and what is an unsecured advance. Then we will see when an secured advance slips to NPA, where it will go. When an unsecured advance slips to NPA, where it will go. Let us see the presentation. Secured advance. What is a secured advance? Secured advance is one where the value of the security is more than 10% of the loan amount at the time of sanctioning the loan. Friends, please understand, secured advance means security should be not necessarily equal to 100% of the loan amount. It can be anything more than 10% of the loan amount at the time of sanctioning the loan. If there is a value of the securities more than 10% of the loan amount, it is called a secured advance. Then coming to unsecured. At the time of sanctioning the loan, the value of the securities 10% or less than that of the loan amount at the time of sanctioning the loan, it is called an unsecured advance. At the time of sanctioning the loan, if the value of the security is more than 10% of the loan amount, it is called a secured advance. At the time of sanctioning the loan, if the value of the security is 10% of the loan amount or less than 10% of the loan amount, even 0%, it is called an unsecured advance. For example, Canara Pension, Canara Budget, there are no securities for that. So at the time of sanctioning the loan, the value of the security is 10% or less than 10% of the loan amount. It is called an unsecured advance, unsecured asset. For example, you take very big advance like infrastructure financing. So infrastructure financing, development of roads, or development of airports, or development of that is ports where the ships are hanging. So these places, what is the security the borrower will give? No security the borrower will give. So they are all called unsecured asset. So wherever the value of the security is more than 10% at the time of sanctioning the loan, it is called an unsecured advance. When the value of the security is 10% or less than 10% of the loan amount at the time of sanctioning the loan, it is called an unsecured advance. Why I am telling these two difference means, when a secured advance slips to NPA, whether it will go to secured substandard or whether it will go to loss asset straight away or whether it will go to doubtful asset. Similarly, when an unsecured advance slips to, for example, Canara Budget, no security at all. When it slips to NPA, first year where it will go, second and third years where it will go. That is why this concept of secured asset and unsecured asset, you should know from the IRACP norm. What is a secured advance? At the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. It is called an secured advance. What is an unsecured advance? At the time of sanctioning the loan, the value of the security is 10% or below 10% of the loan amount. It is called an unsecured advance. Okay. So two things I defined to you. Now I am going to tell in the next slide, when these type of secured or unsecured advance slips to NPA, to which category they will go first. First, let us take unsecured advance. Unsecured assets slipping to NPA. So what is an unsecured advance? At the time of sanctioning the loan, the value of the security is 10% or less than 10% of the loan amount at the time of sanctioning the advance. When an unsecured advance slips to NPA, all unsecured advances, when they slips to NPA, it will be classified as unsecured substandard for first 12 months. Please understand, all unsecured advance, your Canara budget or Canara pension or any other advance at the time of sanctioning the loan where the value of the security is 10% or less than 10%, all unsecured advance, when they slip to NPA, first year, they will necessarily be classified as unsecured substandard. They will not go to loss asset. They will not go to doubtful asset. You see, Canara budget, there is no security. But when you slips to NPA, no security at all. But it will not go to loss asset. First year, it will not go to loss asset or it will not go to doubtful asset. All unsecured advance, when they slip to NPA at the end of the first year, when they slip to NPA, they will be classified as unsecured substandard only and it will remain in this category for 12 months. Okay, from the second year where it will go, from the second year onwards, 1 minute. So from the second year onwards, it will be either classified as a doubtful asset or it will be classified as a loss asset. For example, you take another, but depending upon the availability of the security. So first year, all unsecured advance, whether there is a security of 10% or less than 10%, or there are no security, all unsecured advance will slip to unsecured substandard only. From the second year onwards, it will either go to doubtful asset or it will go to loss asset. When it will go to loss asset, when there are no securities at all. For example, Canara budget or Canara pension, straight away it will go to loss asset. It will not go to doubtful asset. If there are some securities are there, which is 10% or less than 10% of the liability, so these accounts will be classified as doubtful one. Okay, unsecured advance slipping to NPA will be classified as unsecured substandard only in the first year. From second year, it will be classified either as doubtful asset or loss asset, depending upon the availability of the security. Why I am telling this? We are going to see some numerical problems now. So when this account slips to NPA, on which date, what category you will classify, and what is the provision you have to keep for this advance. These circulars, these examples are available in the balance sheet circulars issued by the bank every quarter, particularly March quarter. Okay, sir. So unsecured advance slipping to NPA. Now, secured advance slipping to NPA. Now, what do you mean by secured advance? You please recollect. At the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. It is called a secured advance. Okay, sir. Now, so when a secured advance slips to NPA, whether it has to go to secured substandard, not necessary. Only when an unsecured advance slips to NPA, it has to go to unsecured substandard category first time. But when a secured advance slips to NPA, it is not necessary. It has to go through secured substandard category. Straight away, you can classify the secured advance as loss asset also. When an secured advance will be classified as straight away loss asset. See, at the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. It is a secured advance. When this secured advance slips to NPA, when this secured advance slips to NPA, at the time of becoming NPA, the value of the security is less than 10% of the liability. See, at the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. When the account slips to NPA, there is erosion in the security value. The security is less than 10% of the book liability, and the account become NPA. You see what is the book liability. So what is the value of the security? If the value of the security is less than 10% of the book liability, or even zero when it becomes on the account, because the borrower has siphoned off the assets created by the bank. So this account will be straight away will be classified as loss asset. See? So normally secured advance when slips to NPA will pass through secured substandard, then doubtful and loss assets, normal course. But what are the exceptions to it? If the realizable value of the security is less than 10% of the book liability, when the account slips to NPA on the date, so whenever an account slips to NPA, on the date of NPA, valuation has to be taken either for collateral or for prime security. So that is a guideline. Then only you can go for SARFAESI action, whatever action you want. On the date of becoming NPA, what is the liability in the account? What is the security value? So if the realizable value of the security is less than 10% of the liability, then this account will not be classified as secured substandard. This account will not be classified as doubtful asset. Straight away, it will be classified as loss asset. Similarly, so even though on the date of becoming NPA, even though the liability, the realizable value is more than 10%, this point I told you, on the date of becoming NPA, secured advance, the realizable value is less than 10%. Another possibility, on the date of becoming NPA, the realizable value is more than 10%. But if the account is classified to NPA due to a fraud, then also it will be straight away classified as a loss asset. So again, I repeat, a secured advance is one where the value of the security is more than 10% of the loan amount at the time of sanctioning the loan. When this advance will be classified as a loss asset straight away. When it becomes NPA, on the date of NPA, the realizable value of the security is less than 10% of the book liability. It is considered as a loss asset. Another point. On the date of becoming NPA, even though the realizable value of the security is more than 10% of the liability, but the account has been classified as NPA due to fraud, then also it is classified straight away as a loss asset. Okay, these accounts will not pass through secured substandard and doubtful categories. Okay, so secured substandard, there is a possibility, so secured that is NPA, so secured advance slipping to NPA straight away as loss asset. Then you have to see. Then secured advance slipping to NPA, so they need not be classified as secured substandard, or they need not be classified loss asset. They may be classified as a doubtful asset when at the time of slipping to NPA, a secured advance. So you have to take the valuation. I told you, you have to take the valuation of the security. When the realizable value of the security is more than 10%, but less than 50% of the value assessed by the bank, in the last valuation, it will be straight away classified as doubtful asset. Next slide, I'll give an example, you'll understand. So when a secured advance slips to NPA, on the date of slipping to NPA, you find out the value of the security is more than 10%, but less than 50% of what? More than 10%, but less than 50% of the value assessed by the bank in the last valuation. More than 10%, less than 50%, it will be straight away classified as a doubtful asset. For example, last inspection security value is 100 lakhs. When the account slips to NPA, security values more than 10 lakhs, but less than 50 lakhs. So when at the time of slipping to NPA, the realizable value of the security is more than 10 lakhs, but less than 50 lakhs, then this account will be classified as doubtful one. At the time of slipping to NPA, if the realizable value is less than 10% of the book liability, it will be classified as straight away as loss asset. So what I want to drive home is unsecured advance when it slips to NPA. First year it will go to unsecured substandard. Second year, whether it will go to doubtful or loss asset, that depends upon the security value available over there. Then coming to secured advance slipping to NPA. So first year it will go to loss asset if the security value, realizable value of the security is less than 10% of the book liability. Then the secured advance will straight away slip to doubtful asset when the security value is more than 10% up to 50%. It's straight away classified as a doubtful one. You will not go to secured substandard. All other advances, secured advances, it will be classified as secured substandard when they slip to NPA. Okay, sir. Then, so then now I explained to you what is a secured advance, what is an unsecured advance. When they flip to NPA, the first year where they will go. Now, so unsecured advance, that is, I told you, they will be going to unsecured substandard only. So the unsecured substandard, so unsecured advance will go to unsecured substandard. In the unsecured substandard, you have two categories: unsecured substandard and unsecured substandard infrastructure. So if the loan is given, an unsecured loan is given to an infrastructure category, then it is called unsecured substandard. So a substandard advance is classified into three categories. Why you should know the three categories? The provision vary depending upon the category. So unsecured substandard, unsecured substandard infrastructure, then secured substandard. Secured advance is going to say substandard, no, that is secured substandard. So unsecured substandard, unsecured substandard infrastructure, then secured substandard. Once you are classifying an account into a substandard, either unsecured substandard or unsecured substandard infrastructure or secured substandard, this account will remain in the substandard asset category for a period of 12 months. Okay, so substandard is classified how many categories? Three categories: unsecured substandard, unsecured substandard infrastructure, and the secured substandard. So all the substandard advances, once you classify them as substandard, it will remain in this category for the first 12 months. Then even after, so you are classifying an advance as a doubtful asset. When you classify it as a doubtful asset, it will remain in the doubtful asset category for how much period we are going to see. So DA1. So once, let us assume it goes to substandard, 12 months it is there. Now you have to classify as a doubtful asset, let us assume. You are classifying as a doubtful one. It will remain in this category for 12 months. A doubtful advance will remain in this category for a period of 12 months. Then doubtful more than one up to 3 years. That is, we call it as DA2 and DA3. Okay, we call now in a day-to-day calculation, we say DA2, DA3. So DA1 will remain in the category for 12 months. Already substandard, it remained for 12 months. Then DA1, it will remain there for 12 months. And DA more than 1 up to 3, that is DA2, DA3, it will remain for 24 months. DA1 12 months, DA2 12 months, DA3 12 months. As per RBI classification, there is no question of DA2, DA3. They say DA1, they say DA more than 1 up to 3. That is why I have given DA more than 1 up to 3. So it will remain there for 24 months. Then it will go to DA more than 3. DA more than 3 means what? DA4, DA5, DA6, anything you can say. So DA more than 3. Once an account classified as DA more than 3, for how many months it will stay there? It will stay there. This question they asked last time. When an advance is classified as DA more than 3, it will stay in this category for how many months? It will stay in this category for an uncertain period. What is that uncertain period? Either you recover the advance or you write off that advance, because once an advance becomes DA more than 3, banks have to keep 100% provision on the liability irrespective of the availability of the security. For example, Vijay Mallaya, bank has given a loan to the extent of 1,000 crores, let us assume. You have lot of securities you have taken, mortgage, so many securities banks have taken. Now the account has become more than 3 years DA. So securities you are not able to realize. What is the liability today? 1,000 crores. For the 1,000 crores, banks have to keep provision. Once an account becomes DA more than 3, banks have to keep 100% on the liability, whether securities are there or not. So then when it will be removed from DA3, so it will be removed from DA3 till you close the loan by recovering that is assets by selling the assets, or you write off the loan from your books. So DA more than 3 will remain in this category for an uncertain period. Don't write, it will remain in the category for 12 months. Then what is a provision for secured? After seeing this, we'll go to the examples. Okay, I told you. So that is substandard, unsecured. So you have that is classification of unsecured advance, unsecured substandard, unsecured substandard infrastructure, secured substandard. What is the provision for unsecured substandard? 25%, for example. If a Canara budget loan goes to NPA on the first year, so it is called the unsecured substandard. You have to keep 25% of provision on the book liability. Let us assume there is some advance which is having a security of 5% at the time of becoming NPA. It is also called an unsecured substandard asset. What provision you will keep? So when an unsecured advance goes to unsecured substandard, first year for 12 months, you have to keep a provision on 25% on the book liability, whether security is there or not. Okay, please understand. Okay, substandard advance, if it is classified as unsecured advance, 25% of the book liability, BL is book liability, irrespective whether you have a security or not. Substandard unsecured, that is infrastructure. Substandard unsecured 25%. Substandard unsecured infrastructure, loans given to infrastructure units, what I told you there, what is the provision is 20% of the book liability, irrespective of the value of the security you have or not. Then substandard, secured substandard. What is secured substandard? We explained there. The provision is 15% of the book liability. So friends, please understand, substandard is classified into 3 categories: unsecured substandard, unsecured substandard infrastructure, secured substandard. Unsecured substandard, 25% provision on the book liability, irrespective of the security. Similarly, unsecured substandard infrastructure, 20% on the book liability, secured substandard, 15% on the book liability, irrespective of the value of the security. Coming to doubtful asset. What is the provision for doubtful assets banks have to keep? If it is DA1, so then you classify, then you give a provision of deficient plus 25% of the secured portion. What do you mean by deficient? Deficient plus 25% on the secured portion means what? See, today, let us assume the account becomes NPA, the liability is 100 lakhs. Let us assume the security value is only 75 lakhs. The account becomes NPA, you have taken the valuation, liability is 100 lakhs, security value is only 75 lakhs. Okay, so in that case, it is classified as DA1. So what is the security value? 75. What is the liability? 100. The difference between the two is called the deficient. So 25 lakhs is the deficient. Then besides this deficient portion, you have a security value. No, what is the security value? You had the example, 75 lakhs. So you have to keep a provision of 25% on the 75 lakhs also. So doubtful first year, the provision is 25% on the deficient plus 25, deficient plus 25% on the security value. If it is DA more than 1 up to 3 years, you have a provision of deficient plus 40% on the secured portion. DA more than 3, whether security is there or not, you have to keep provision of 100% on the book liability. I got the example of Vijay Mallaya to you. So DA more than 3, 100% provision on the book liability. Suppose either for DA1, DA2, DA3, suppose if there is a government guarantee, if there is a government guarantee, to that extent, you need not keep provision. When we are going to see the example, you will understand. Again, I repeat, friends, DA1 deficient plus 25% on the secured portion is the provisioning. DA more than 1 up to 3, that is deficient plus 40% on the secured portion. DA more than 3, 100% on the book liability. You have to keep provision. However, either DA1, DA2 or DA3, if there is a government security, for example, CGTMSC, ECGCC, etc., if it is a government security, you need not keep provision to the extent of that government guarantee. Then in the case of a loss asset, or in the case of your accounts classified as loss due to fraud, you have to keep a provision of 100%. Okay. Then this is the final slide. Then we'll go to the questions. We'll come back to the questions. Now, friends, please understand provisioning is not only for substandard. As per Reserve Bank of India guidelines, provisioning banks have to keep on the standard asset also. For example, these things they will ask for 1 to 2 or 2 to 3. For example, a farm credit. If the advances are, agriculture, you have farm credit, infrastructure, ancillary, etc. No, in agriculture, if you classify a loan as a farm credit only, not ancillary or infrastructure. In agriculture, if you classify a loan as a farm credit, then and in MSME, if you classify a loan as MSC, micro and small enterprises, not medium. So if you classify a loan as a farm credit under agriculture, and if you classify a loan as MSC, micro and small enterprises, not micro, small and medium enterprises. If you classify as MSC, and if these advances are standard assets, banks have to keep a minimum provision of 0.25% on these advances, even though they are standard assets. Then loans given to individuals, housing loans, on or after the loan given if the loans are outstanding. Loans given to individuals for housing loan on or after 7/6/2017, you have to keep a provision of 0.25% on the standard asset housing loan. Suppose if you are given a housing loan to an individual before 7/6/2017, repayment period is 30 years, let us assume. Before 7/6/2017, if the loans are outstanding, then you have to keep a provision of 0.40% on these standard asset. So you should understand, when you will keep an individual housing loan 0.25, when you will give an individual housing loan 0.40. Then capital market exposure. Loans given under, they discuss in the credit policy and all, no? Loans given to capital market exposure. For example, so big theater is coming, very big theater complex is coming, or commercial complex is coming. We call them as commercial real estate exposure. So CRE exposure, you have to keep a provision of 1% on that is outstanding liability. Then commercial real estate, residential housing. CRERH means commercial real estate residential housing. What do you mean by residential housing? You are giving a loan to a builder. He is constructing various flats or houses, and for dwelling purpose, he is going to sell it. He is not going to keep it for captive purpose. So loans given to builders for construction of dwelling houses, which are going to be sold to individuals, it is called commercial real estate residential housing. The outstanding loans, if they are standard asset, you have to give a provision of 0.75%. Then teaser rate housing loan till 1 year from the date of interest rates or reset at higher rates. What do you mean by a teaser rate housing loan? I think we don't have in our bank. Some other banks are having. What do you mean by a teaser rate housing loan? So when the housing loans are sanctioned, first few years, the EMI will be less. That is, the interest will be less. And from 5th year or 6th year onwards, the interest rates will become more. They will fix a higher rate of interest and they will recover more EMI. So that is called the teaser rate housing loan. So what is the provision for standard asset when the housing loan is given under the teaser rate housing loan? Till 1 year from the date interest rates are reset at higher rates. So first 5 years, okay, normal lesser rate of interest 5%, let us assume. From 6th year onwards, the interest rate has become 8%. So from the 6th year onwards, the provision, that is for the provisioning for standard asset, teaser rate housing loan, till 1 year, from the till 6 years, the interest rate provision will be 2% on the standard asset. Then all other loans and advances, the provision for standard asset is 0.40%. Then restructured accounts after 1/6/2013, the provision, if they are in standard asset, the provision is 5%. Restructured under regulatory RF no 2.0, then it is 10%. So if they ask any question, what is the provisioning for the standard asset? This is the table. So you have for you have for individual housing loan, then farm credit and MSC, CRE exposure, CRERH, teaser loan housing loans, all other loans and advances, restructured loan after 1/6, and restructured and RF, the 2.0, what is it? It is advances. Now let us see the question now. Okay, sir. We'll go back to the question. You'll understand. Okay, sir. Now we have seen. Okay, 12 we have seen. Now question number 13. Now you'll answer all the questions. Substandard assets are classified into how many categories? I told you unsecured substandard infrastructure, then secured substandard. For question number 13, answer is A. Question number 13, answer is A. Question number 14. A substandard account will remain in this category for how many years? Once you classify an advance as substandard, either unsecured substandard infrastructure, or secured substandard, it will remain in this category for 12 months. Question number 14, answer is, question number 14, answer is A. Question number 14, answer is A. Question number 15, doubtful assets are classified into how many categories? So, doubtful assets are, friends, I told you, DA1, DA more than 1 up to 2, DA more than 3. Doubtful assets are also to be classified into 3 categories only for your balance sheet purpose. So your DA4, DA2, DA3, etc. you derived for your internal purpose. So doubtful assets are classified into 3 categories. Again, question number 15, answer is A. Question number 16. So this question only was asked last time for some group in our bank. A doubtful asset more than 3 years, DA more than 3, DA more than 3, doubtful asset more than 3 years will remain in this category for how many years? 12 months, 24 months, 36 months, uncertain period. Friends, DA1 will remain in this category for 12 months. DA more than 1 up to 3, it will remain in this category for 24 months. DA more than 3 will remain in this category for an uncertain period till you recover the advance or till you write off from the books of the bank. So question number 16, answer is D. Question number 16, answer is D. Question number 17, which is not relevant with regard to provision for substandard asset. What I told you. So with regard to substandard asset, either unsecured substandard or unsecured substandard infrastructure or secured substandard, you have to keep provision 25% or 20% or 15% on the book liability, irrespective of the value of the security. Now let us answer the question. That is, which is not relevant with regard to provisions of substandard asset, which is not relevant, which is an odd man out, which is a wrong point you have to give. Secured substandard 15%, correct. Unsecured substandard infrastructure 20%, that is correct. Unsecured substandard others 25%. Okay, secured substandard 15, unsecured infrastructure 20, unsecured substandard others, it is 25%. So A, B, C are correct. Point number D, you see, provision for substandard will be calculated on the book liability less realizable value of the security. No, that is not correct. Provision for substandard asset will be calculated on the book liability whether there is security or not. All options are relevant. Which is not relevant? Answer is D. Answer is D. This is a wrong point. Provision for substandard will be calculated on the book liability only, not less realizable value of the security. Question number 17, point number D is not relevant. So you have to tick point number D for question number 17. Okay, sir. Now, which is the odd man with regard to provision for standard advance? This question was asked sometime for some other bank last time. Which is the odd man out? Which is wrong? Which is the odd man out with regard to provision for standard advance? Farm credit and MSME 0.25, the CRE exposure 1%, restructured under RF2, that is 10%, individual housing loan sanctioned after 7/6/2017 0.25, none of these, which is the odd man out, which is wrong. You see the first point is wrong. Farm credit and MSME, not MSME, MSC. Farm credit and MSC only, it is 0.25. Agriculture infrastructure, it is not 0.25. Agriculture ancillary, it is not 0.25. MSME, it is not 0.25. For all other advances, I told you it is 0.40, isn't it? So for farm credit and MSME, 0.25, it is wrong. So this is the odd man out. Question number 19. So from question number 19 onwards, 4 or 5 questions, we are going to see that is a PowerPoint presentation with regard to calculation of the provisioning norm, IRAC IRAC and P norm, income recognition, asset classification, and provisioning norm. That is what RBI circular says. IRAC and P, income recognition, asset classification, and provisioning norm. So our class is IRACP norm and recovery matters. Question number 19. A term loan, it should have been there. A term loan account has started showing overdue on 22nd February 2022. The liability is 10 lakhs and the security value 7 lakhs. If the overdues are not recovered, what is the asset classification of this account as on 31st March 2023 and what will be the provision on 31st March 2023? Whether it is classified as secured substandard, the provision is 2.50 lakhs or secured substandard provision is 4 lakhs, secured substandard provision is 1.50 lakhs, none of these. That is your options. What they say, that is a term loan, started showing overdue on 21st February 2022. If the overdue remains for more than 90 days, at the end of the 91st day, the account will slip to NPA. That all of us know. The liability is 10 lakhs and the security value 7 lakhs. Isn't it more than 50%? So liability is 10 lakhs, liability is 10 lakhs and the security value 7 lakhs. When it becomes NPA, it is a secured substandard. So when the value of the liability, when the book liability is less than 10 lakhs, straight away loss asset. When the book liability, the security is 10 to 15%, it is a doubtful asset. When the security value is more than 50%, when it becomes NPA, it is a secured substandard. Okay. So the liability in the account is 10 lakhs and the security value is 7 lakhs. If the overdues are not recovered, what is the asset classification of this account as on 31st March 2023 and what will be the provision on 31st March 2023? You see the PowerPoint presentation, you will understand. First overdue in this account on term loan, first overdue in this account on 22/2/2022. So 90 days, at the end of the 91st day, the account will become NPA. So if you calculate the 90 days and 91st day, you will get the account will become NPA on 23/5/2022. That is term loan becoming NPA or after 90th day, that is at the end of the 91st day. So if we calculate from 22 to 2022, 23/5/2022 will be the 91st day. So it will become NPA on 23/5/2022. When it becomes NPA, whether it is a doubtful asset, whether it is a loss asset, whether it is secured substandard, unsecured infrastructure, they say liability is 10 lakhs, security value 7 lakhs. So when it becomes NPA, it will become a secured substandard. Okay, liability value, the security value is more than, that is 50% of the book liability. It is called a secured substandard. 1 minute. Okay, so it will become, so the account becomes NPA on 23/5. On the date of becoming NPA, what is the classification? You should know. Then only you can give the correct provisioning. So on 23/5/2022, the account will be classified as secured substandard. Then I told you, once an account becomes NPA, it will remain in this category substandard. Once it becomes substandard, it will remain in this category for 12 months. It will remain in the category for 12 months. So when it has become NPA, secured substandard on 23/5/2022. So till 22/5/2023 for next 12 months, from 23/5/2022, only on 23/5/2023, it will become DA1. Isn't it? I told you that substandard asset will remain in this category for 12 months. Once you classify as a substandard, either secured substandard, unsecured substandard infrastructure, it will remain in this category for a period of 12 months. So when it will go to DA, if it is not recovered, only after 12 months on 23/5/2023, only it will become doubtful. What is the question? You see the question. So a term loan started showing overdue on 22nd February. The liability is 10 lakhs, security value 7 lakhs. So if the overdues are not recovered, what is the asset classification of this account on 31st March 2023? They are asking. Okay, now let's go back to the slide. See the slide. So the account becomes NPA on 23/5. On the date of becoming NPA, it is a secured substandard because liability is 10 lakhs, security value is 7 lakhs. So it is a secured substandard. It will become doubtful only on 23/5/2023. The question is asked on 31/2023, what is asset classification? What is the provision you will keep on this account? So from 23/5/2022 till next year only it will become DA. In between any date, it will be in the secured substandard only. Once an account is classified as a substandard, it will remain in this category for 12 months. So on 31/3/20, that is why I given a different color there. The question they asked. On 31/3/2023, the account will be classified as secured substandard. What is asset classification? Secured substandard. Then what is the provision you will keep for this account? I told you for secured substandard, 15% on the book liability, irrespective of the security value. What is a book liability? So provision for the secured substandard, 15% on the book liability, irrespective of the security value. Book liability is 10 lakhs, 15% on the book liability is 1.50 lakhs. So on 31/3/2023, it is asset classification is secured substandard, and another answer is provision for the secured substandard is 1.50 lakhs. Let's go back to the question. Question number 19. A term loan account has started showing overdue on 22nd February. The liability is 10 lakhs and security is 7 lakhs. If the overdues are not recovered, what is asset classification for this account on 31st March 2023? And what will be the provision on 31st March 2023? So secured substandard and provision is 1.50. So question number 19, your answer is C. Question number 19, your answer should be C, which I explained through the PowerPoint presentation. I will also upload the PowerPoint presentation today evening. Question number 20. Question number 20. Okay, sir? Okay, audio settings. Something additional. Okay, sir. Now, question number 20. If an account becomes substandard asset, if an account becomes substandard on 30th March 2013, and the book liability is 10 lakhs and the security value 6 lakhs. Substandard means become only security substandard because book liability is 10 lakhs, security value 6 lakhs, more than 50%. The account becomes substandard on 30th March 2013, and the book liability is 10 lakhs and security value 6 lakhs. What will be the asset classification for this account on 31st March 2018? And the provision required for this account on 31st March 2018, when the account became NPA on 30th March 2023. So book liability is 10 lakhs and security value 6 lakhs. Now they are asking on 31st March 2018, what is the asset classification and what is the provision? Question number 20, let us see. See, the account became NPA on 30/3/2023. What is asset classification? The asset classification for this account is secured substandard. Why? 10 lakhs is the liability, 6 lakhs is the security value, more than 50%. So on 30/3/2023, the account is a secured substandard. Then I told you it will remain in the category for 12 months. Then when it will become DA1, on 30/3/24, it will become DA1. Once it becomes DA1, it will remain in this category for that is 12 months. So when it will become DA1 more than 3, that is DA2, it will be on 30/3/2015. Then 30/3/2016, it will be till 30/3/2016, it is DA1 more than 3. That is, we call it as DA3. Okay, 24 months. Then when it will become DA more than 3, on 30/3/2017, it becomes DA more than 3. What they have asked in the question, then on 30/3/2018, I told you, once an account slips to DA more than 3, it will remain in this category for an uncertain period. So once it becomes DA more than 3 for subsequent years or for subsequent period till the loan is closed or amount is realized, it will be DA more than 3 only. On 33/2018 also it is DA more than 3. They asked the question on 31/3/2018. Then also it is DA more than 3. So DA, why I have given this question is DA more than 3 will remain in this category for how many years? DA more than 3 will remain in the category for an uncertain period. So irrespective till the loan is closed or till you write off, it will remain in this category for an uncertain period. So it become DA more than 3 on 33/2017. They are asking on 31/3/2018. It is DA more than 3. DA more than 3 will remain in this category for uncertain period. For DA more than 3, what is the provision, sir? 100% on the book liability, irrespective of the value of the security. If there is any government guarantee, to that extent, you need not keep any provision. In this example, question number 20, they are not told anything about the government guarantee. So the book liability is 10 lakhs. Even though security value is that to the extent of 6 lakhs, you have to keep 100% provision on the book liability. The answer is 10 lakhs. Okay, let us see the question now. You'll understand. Question number 20. If an account becomes substandard on 30th March 2013 and the book liability is 10 lakhs and security value 6 lakhs, what is the asset classification for this account on 31st March 2018? I explained to you DA more than 3 and the provision required for this account on 31st March 2013. DA1, no. DA more than 1, no. DA more than 3 and the provision is 10 lakhs. Question number 20, answer is C. Explained to you by means of a PowerPoint presentation. Question number 20, answer is C. Question number 21. So slowly we are going. Slowly one after the other. Then first is we have seen substandard. Then we have gone to DA1. This is a DA1. Then we have go to DA3. Then we'll go to government guarantee. 4 or 5 examples. If you understand now, you will answer any question that is asked. These examples questions are given in your balance sheet circular. Whenever the March balance sheet circular is coming, these type of examples are given that. From there only examiner takes. Okay. Question number 21. The book liability of NPA account is 6 lakhs. The collateral value is 3 lakhs and the prime security is 2 lakhs. Guarantor's net worth is 10 lakhs. What is the provision? What is the provision? You will keep for this doubtful account of more than 1 year up to 3 years. So already they are told this account is DA more than 1 up to 3. As on 31st March 2021, it is DA more than 1 up to 3. What provision you will keep this account? What is normally what is the provision of DA1 more than 1 up to 3? Deficient plus 40% on the security value. So now you have to find out what is the security value available. You know the liability, you know the asset classification. Now you have to tell what is the provision you have to keep for DA more than 1 up to 3. So DA more than 1 up to 3, that is your provision is deficient plus 40% of on the secured portion. So you have to calculate the secured portion and deficient. Let us see the example now. Question number 21. Number 21 example. See, DA more than 1 up to 3 deficient plus 40% on the security. Book liability is 6 lakhs. Now what is the deficient? To find out the deficient, you have to find out what is the security value. So prime security 2 lakhs you can take for security value calculation. Prime security, if anything is there, you can take the prime security. And collateral is there, collateral also you can take. But guarantor's net worth you cannot take. So prime security is 2 lakhs and the collateral is 3 lakhs. So the security value is 2 plus 3, 5. Here there's a guarantor's net worth they are given. No, you should not take the guarantor's net worth. They are given guarantor's net worth 10 lakhs. That should not be taken for calculation of the deficit for the security value. Okay, you have to take only prime security and collateral. So security value is 5 lakhs. So book liability is 6 lakhs. What is the deficient? 6 plus 5, 1 is the deficient. So you have to keep provision first, the 100% on the deficient 1 lakh. Then what is the DA1 more than 3 up to 3? DA more than 1 up to 3. The provision you have to keep is 40% on the security. What is the security value? Security value already you have calculated 5 lakhs. So 40% on 5 lakhs is 2 lakhs. So deficient is 1 lakh. So total provision is deficient plus 40% on the security value. 40% on the security value is 2 lakhs. 1%, 1 lakh is the deficient. So the total provision for this account you have to keep is 1 plus 2, 3 lakhs. Okay. So this is the way you have to calculate. See the book liability, etc., etc. So here one point what I have driven you home is you should not take into account the guarantor's net worth for calculation of the security value. So collateral you can take, prime security you can take. So it is 3 lakhs. No. Question number 21. Answer is D. Question number 21. Your answer is sorry. Question number 21. Not answer is not D. What answer you got, sir? The answer is 3 lakhs. Question number 21, your answer should be 3 lakhs. Question number, yes. Your question number 21, answer is 3 lakhs, is C. So question number 21, answer is B. Question number 21, answer is B, 3 lakhs. Then you see, question number 22, a Canara budget. Question number 22, we are seeing a Canara budget loan became NPA on 30th November 2020. Friends, you know Canara budget is an unsecured advance. When an unsecured advance slips to NPA, I told you it will be classified as unsecured substandard only. First 12 months from the date of NPA, it will be in the unsecured substandard only. From the next month onwards, from the next year onwards, it will either go to DA1 or loss asset depending upon the availability of the security. This is a Canara budget loan. It become NPA on 30th November 2020. Till 30th November 2021, it will be unsecured substandard only. Then from 30th November 2021, it will straight away go to loss asset because Canara budget, there is no security. Now, what is the question? The Canara budget loan became NPA on 30th November 2020. What is the asset classification for this loan on 30th November 2021? Let's see the presentation. Canara budget. When an unsecured advance slips to NPA, in the first year, it will be unsecured substandard. In the second year, it will be DA1 or loss, depending upon the availability of the security. Okay, for Canara budget loan, no security. So in the second year, it will be classified as loss asset. So 30th November, it is an unsecured NPA because on 30th November 2020, it became NPA. What they are asking on 30th November 2021, what is the asset classification and what is the provision you have to keep for this advance? On 30/11/2021, I told you first 12 months it will be in the unsecured substandard. Since there is no security when unsecured advance Canara budget, on 30/11/2021, it will be classified as loss asset. You have to keep 100% provision. Question number 22. A Canara budget loan become NPA. What is asset classification on 30th November 2021? On 30th November 2021, at the end of first 12 months, it will be classified as a loss asset. Question number 22, answer is C. Question number 22, answer is C. Question number 23. An NPA account with balance of rupees 10 lakhs, value of the security is 1.50 lakhs. The account is more than 3 years DA, more than 3, DA more than 3. Provision for this account is rupees 8.50 lakhs, rupees 10 lakhs, rupees 1.50 lakhs, rupees 9.40 lakhs. An NPA account with liabilities 10 lakhs, value of the security is 1.50 lakhs. They themselves are given in the example. The account is DA more than 3. I told you, if the account is DA more than 3, irrespective of the value of the security, you have to keep 100% provision on the book liability until otherwise there is some government guarantee available. In this question number 23, they are telling it is DA more than 3. They are telling book liability 10 lakhs, security value 1.50. They have not told anything about the government guarantee. They are not told anything about the government guarantee. Then in such a case, you have to keep 100% provision on the book liability. So for question number 23, answer is B. Let us see the present. Of course, I think it is not there. So straight away I have told you, for question number 23, answer is B, because 100% on the book liability, irrespective of the value of the security. Question number 23, answer is B. Now, we are going to see question number 24, 25, and 26, whatever it is, with the government guarantee. When there is a government guarantee, when the advance is classified as DA1, DC, whenever there is a government guarantee, so for the secured portion of the government guarantee, there is no need to keep provision by the banks with regard to doubtful assets. But for substandard assets, you should not take into account the government guarantee. For doubtful 1, doubtful 2, doubtful more than 3, if any government guarantee is there, to that extent, banks need not keep any provision. Question number 24, you see. An NPA account with balance of 10 lakhs secured by CGF guarantee cover of 75%. Value of the security is 1.50 lakhs. Account is more than 3 years DA. DA more than 3. Provision for this account, 10 lakhs, 2.50 lakhs, 9.40 lakhs, 3.625 lakhs. See friends, I told you, if the account is a doubtful asset, to the extent if there is a government guarantee, you need not keep provision to the extent of the government guarantee. So here, you have a government guarantee. What is the extent of the government guarantee? 75%. Now the question is, 75% on what? Government guarantee is there, no? 75% on what? Whether 75% on 10 lakhs or 75% on 10 minus 1.50 lakhs. Friends, please understand the CGTMSC guarantee or CGF guarantee or ECG guarantee, etc. If there is a security, to that extent, the government will not give guarantee. Here, the liability is 10 lakhs, the security value is 1.50. So for the balance 8.50 lakhs only, you will get a government guarantee of 75% here. Okay, now let's see the PowerPoint presentation. That is a logic. Question number 24. Book liability is 10 lakhs. Security value is 1.50 lakhs. Balance is 8.50. Guarantee is 75% on 8.50, not 75% on 10 lakhs. Please understand. Okay, so we should not straight away calculate. The guarantee will be on 75% on the book liability. If there is any security, to the extent of the security, guarantee will not be available. So on the balance only, you will get the government guarantee. Guarantee is 75% on 8.50, which is 6.375. So normally, if it's DA more than 3, you will keep 100% on the book liability. Now you have got a government guarantee. DA more than 3, if government guarantee is available, to the extent provision need not be kept. So you have a liability of 10 lakhs. You have a government guarantee of 6.375 lakhs. So 10 minus 6.375, provision for this DA more than 3 account is only 3.625 lakhs. Here what you have learned how to calculate the government guarantee, whether on the liability. If there is any security, after subtracting the security, you have to calculate the guarantee. First point I told you. Second point, for doubtful assets, if there is a government guarantee, to the extent of the government guarantee, you need not keep provision. So normally, DA more than 3 is 100% on the book liability. If there is no government guarantee in this account, you would have kept 100%, 10 lakhs as the provision. But since there is a government guarantee, you know how to calculate the government guarantee, which is 6.375. 10 minus 6.375, 3.625 is the provision needed for this account. Question number 24, answer is D. Question number 24, answer is D. If the answer, question number 24, answer is D. Okay, now another 2 questions with this example we'll go through. So any question asked, you should not be able to miss it. Question number 25. Question number 25. A pre-shipment export credit, DA more than 1 up to 3. What is the provision for DA more than 1 up to 3? Deficient plus 40% on the secured portion. If there is a government guarantee, to that extent, you need not keep provision. That is the logic. Okay. Now let us see. That is a pre-shipment export credit, DA1 more than 3 as debits or DA more than 1 up to 3 as debit balance of 4 lakhs. 4 lakhs is a liability. The security value is 1.50 lakhs. ECG cover is available to the extent of 50%. What provision is required for this account? So let's see the PowerPoint presentation. Question number 25. Friends, please note the liability in the account is 4 lakhs. Security values 1.50 lakhs. So what is the balance available? Balance available is 2.50. ECG guarantee is available 50% on 2.50, not 50% on the 4 lakhs. Any security is there, to the extent of the security, government guarantee we will not get. ECG is 50%. It means ECGC is to be calculated after deduction of the security value from the liability and not on the liability. So what is the ECGC guarantee you are going to get? 50% on 2.50, 1.25. Okay, see the slide. Liability is 4 lakh. You have a security of 1.50. Then you have ECGC guarantee 1.25. What's the total security value? 1.5 plus 1.25. Security value you have 1.5 and ECG government guarantee you have 1.25. That is a total security value. See, the total security value for this account is 1.5 you have some security and 1.25 is the ECG guarantee. So total security value is 2.75. What is the deficient? Deficient is liability minus security. You have to take both the securities. So deficient is 1.25. Suppose if there is no government guarantee, you will get deficient 4 minus 1.50. Now, since you have a ECGC guarantee, so to the extent, so deficient will not be there. So 4 minus 2.75. So deficient plus DA more than 1 up to 3. Deficient plus 40% on the secured portion. Now, what is the secured portion? So for secured portion, you have taken to find out the deficient. Secured portion, you have taken the security value available plus the ECGC guarantee. So you found out the deficient. Now you are going to calculate provision for the secured portion. Deficient plus 40% on the secured portion. While calculating 40% on the secured portion, I told you, wherever there is a government guarantee, to that extent, we need not keep provision. So, provision need not be kept on the ECGC guarantee available. So, DA more than 1 is deficient plus 40% on the security. So, calculate 40% on the 1.50 only. Please do not calculate 40% on the security value, means not 40% on the 2.75, because this 2.75 you have to take only for calculation of the deficient purpose. This 2.75 consists of 1.25 of the government guarantee also. So 40% of the security value is 40% on 1.50, 40% not on 2.75. Okay, so provision is deficient. Deficient you have calculated. Then 40% on the 1.50, which is equivalent to 0.60. So total provision required for this account is 1.25 plus 0.60, which is equal to 1.85. So here what we saw, whenever there is a government guarantee, so to that extent, you need not keep provision. For calculation of the deficient purpose, you can take the government guarantee. See, what is advantages to the bank? Whenever there is a guarantee, either CGTMSC guarantee or ECGC guarantee, etc., to that extent, banks need not keep provision. Not only that, that security value will be deducted for calculation of the deficient purpose. There also provision is reduced. So taking the government guarantee is much better than taking a collateral security. Okay, sir. So for question number 25, your answer should be 1.85 lakhs. Question number 25, your answer should be D. Question number 25, answer is D. The last question for this type of example, then quickly we'll go through other possible questions. It's going to be 12 o'clock. Till 1, I'll take the session. Question number 26. Yeah, account DA1. So already they are told DA1. The moment they say DA1, you should come to your mind what is the provision. DA1, deficit plus 25% on the security. That's all. Now you have to see whether government guarantee is there, government guarantee is not there, how to calculate the deficit, how to calculate the provision. That's all, very simple. Account is DA1. Liability is 10 lakhs, prime security is 2 lakhs, collateral is 3 lakhs. Guarantor's net worth is 20 lakhs. I told you, for calculation of the security, guarantor's net worth should not be taken. CGTMSE cover is also available, 50%. What is the provision required for this account? Quickly, we'll go through the PowerPoint presentation. You will understand. See, liability is 10 lakhs. Security is 2 lakhs plus 3 lakhs. Sick prime and collateral. You have 5 lakhs is the security. Guarantor's net worth not to be taken. So, excluding the security, you have 55 lakhs is the liability. CGTMSE cover is 50% on the 5 lakhs and not 50% on the 10 lakhs. CGTMSE is 50%. It means CGTMSE is to be calculated after deduction of the security value from the liability and not on the liability. So 50% on 5 lakhs. So CGTMSE is 50% on the 5 lakhs is 2.50 lakhs. Now what is the total security for this loan? You have total security 2 plus 3, 5 plus the 2.50 government guarantee. You see, total security 2 plus 3, 5 plus government guarantee 2.50. So total security, you have got 7.50 lakhs. So what is the deficit? 10 minus 7.50, 2.50. What is the provision for DA1? Deficit plus 25% on the security. So while calculating the 25% of the security, you need not take the government guarantee. It is sufficient if we calculate 25% on the 5 lakhs. So deficit plus 25% on the 5 lakhs, which work out to 1.25. So deficit is 2.50. Provision is on 40%, 25% of the secured portion is 1.25. So total provision required for this account is 3.75 lakhs. Okay, this is the way. All possibilities are given to you. So question number 26, your answer should be 3.75. Question number 26, answer is A. So from question number, if I am correct, from 20 or 21 till 26 we are covered. So when there is when the account switch to secured substandard or unsecured substandard, when there is a government guarantee, when there is a guarantor's network, how to calculate the deficit, how to calculate the provision and total provision, how to arrive at. The first few questions we saw, on this date, the account will be classified under what category. So these examples are there in your balance sheet circular. From these circulars are taken. Anything else, you should not miss it. Okay, sir. Question number after 26, we are saying. Now, question number 27. Straight away, we are going to see question number 27. Okay, question number 27, we will see. 1 minute. Okay, question number 27. These things are straight away what we are seeing. No, first 4, 5 plus slides we have seen. From there, straight away questions are here now. In an OCC account, your stock statement is not submitted for more than 3 months from the due date, and hence the drawing power calculated from the stock statement is older than 3 months. It is called an irregular OD OCC account. It is not an out of order. If it is for 180 days, then it is an out of order advance. That is an NPA. So for question number 27, answer is irregular. Question number 28. In a CC account, the DP was arrived based on the stock statement of 31st March 2019. The last stock statement is 31st March 2019. If further stock statements are not submitted for how many months, the account will become NPA. 180 days, no, 6 months. 6 months or 180 days. If they given the number of days, 180 days. At the end of the 6th month, at the end of the 180th day, the account will slip to NPA. Question number 28, answer is A. Question number 29. In a OCC account, limit expired on 1st November 2020. If the limit is not renewed for how many days, the account will slip to NPA. Limit not renewed, 180 days. So question number 29, answer is 180 days. Question number 30. Substandard, doubtful, and loss assets. Substandard, doubtful, and loss assets, they are not called SMA. They are not called special watch. They are not called red flag accounts. None of these. Answer is none of these. They are called NPAs. Substandard, doubtful, and loss assets are called as dash. They are called NPAs. So your option for question number 30 should be none of these. Question number 31. What is the question number 31? What is the accelerated provision for DA1? Friends, we have seen provision, isn't it? What accounts we have seen? Secured substandard, 15%, unsecured substandard, 25%, unsecured substandard infrastructure, we saw 20%. Then we saw DA1, deficient plus 25% on the security, DA more than 1 up to 3, we got deficient plus 40% on the security, then DA more than 3 or loss assets, fraud assets, it is 100% on the book liability we saw. Even for standard assets, we saw various types of provision. The question is, what is an accelerated provision? Same, I told you, you have to report an account, either a standard asset or SMA1, SMA0, SMA2, etc. to CRILC every month. Then depending upon the overdues, weekly report also to be submitted. Suppose an account has to be classified in your books as substandard, or an account to be classified as a doubtful one. If you are not classified the account, and if you are not reported the account as either substandard or doubtful, then you have to keep more provision for this account as compared to the normal provision. Secured substandard, you have to keep 15% provision. If you don't report it to CRILC as secured substandard, so then if they find it out, during the RBI inspection, if they find out, they say, normally you have to keep 15%. Since you are not reported the matter to RBI and CRILC, you have to keep higher provision for this account. That is called accelerated provision. You will see the slide. What type of accounts? What is the accelerated provision? You'll understand. So if the other question, maybe for 2 to 3 or 3 to 4, they may ask the question. Say asset classification. Friends, normal provision and accelerated provision. Secured substandard, normally you have to keep 15%. So let us assume a secured substandard, so 15%. You are not shown as secured substandard up to 6 months. 6 months is over. Till 6 months, you are not shown as a secured substandard to CRILC. Okay, you continue to keep only 15%. Suppose even beyond 6 months, once you classify an account as substandard, it will be remaining there for 12 months. So beyond 6 months up to 1 year, if you are not shown as a secured substandard to CRILC, you have to keep accelerated provision 25%. So normally, either up to 1 year for a secured substandard, you will keep only 15%. Beyond 6 months up to 1 year, you are not classified the account as a secured substandard and you are not shown to CRILC as secured substandard. If RBI has found it out, then you have to keep 25% provision on the book liability as compared to 15%. This is accelerated provision for secured substandard. Then accelerated provision, substandard and unsecured other than infrastructure. So normally up to 15 months, 6 months, you will keep 25% on the unsecured substandard. So 6 months to 1 year, if you are not shown, then you have to keep 40% provision as accelerated provision instead of 25%. This is the accelerated provision for unsecured substandard other than infrastructure. Unsecured substandard infrastructure, again up to 6 months, no penalty. For more than 6 months up to 1 year, if you don't show it unsecured substandard infrastructure, normally you have to keep only 20%. So sorry, up to 6 months, so you have to show it 20%. So beyond up to 6 months, if you don't report it, here you have 25% is accelerated provision. Here up to 6 months, no accelerated provision. Beyond 6 months only accelerated provision comes. For the unsecured infrastructure, up to 6 months itself, in the accelerated provision is coming 25%. Beyond 6 months up to 1 year, it is 40% on the book liability, which is the accelerated provision, but normal provision is only 20%. Coming to doubtful assets. Doubtful, DA1, normal provision deficient plus 25% on the secured portion. So DA1, if you are no question of 6 months, 2 months, today you have to classify the account as DA1. If you are not classified the account as DA1 and the CRILC RBI inspection they found out, they will ask you to keep deficient plus 40% on the secured portion. Normally, I will show it as DA1, 25% on the secured portion only you will keep as the provision because it is DA1. Since you have concealed the fact, then you have to keep 40% on the secured portion. DA more than 1 up to 3, you have to keep deficient plus 40% on the secured portion. If you are not showing is DA more than 1 up to 3, then you have to keep 100% on the book liability. This is the accelerated provision for DA more than 1 up to 3. Then DA more than 3, anyhow you are going to keep 100% provision. You continue to keep 100% provision only. So friends, if they ask the question, what is accelerated provision? Normally, one provision you have to keep, and accelerated provision means if the accounts are not properly classified as NPA and if they are not reported to CRILC as NPA, either secured substandard, substandard, unsecured substandard, or DA1, etc. So banks have to keep higher provision as compared to the normal provision applicable to these accounts. This is called accelerated provision. Okay, sir. So be thorough with accelerated provision. Some higher levels, if they ask the question, you should not miss. So what is accelerated provision here? In the question number. Okay, what is accelerated provision for DA1? So accelerated normal provision, what is it? Deficient plus 25% on the secured portion. Accelerated provision is deficient plus 40% on the secured portion. For question number 31, answer is deficient plus 40% on the secured portion. Normally 40 plus 25, now it is, sorry, deficient plus 25, now it is deficient plus 40%. Okay, deficient plus 40%. Then under OTS, so any of these questions should come in the OTS. Any of simple question I have given here. Under OTS, the compromise amount is calculated after taking into what cost? See, follow-up cost, variable cost, maintenance cost, opportunity cost. See, so under OTS, the compromise amount is calculated after taking into account the opportunity cost. What is that opportunity cost? We will explain further when we discuss in the OTS. So for question number 32, answer is D. So under OTS, the compromise amount is calculated after the bank takes into account the opportunity cost. Question number 32, answer is D. Question number 33. In the case of advances given to short duration crop, and if interest or installments remains overdue for 2 crop reasons, the account will be classified as NP. All of us know. For short duration crop, interest and installment is not serviced for 2 crop seasons, it become NPA. For a long duration crop, interest and installments not serviced with per 1 crop season, it is classified as an NPA. So all of us know this. But what the question was asked was short duration crop for IRAC purposes. So what do you mean by short duration crop? Harvest within 12 months, harvest within 18 months, harvest is within 24 months, and none of these. For short duration crop, for IRAC norm purpose, short duration crop means harvest within 12 months. Harvest is within 12 months. Question number 33, answer is A. If the harvest is beyond 12 months, it is called as a long duration crop, not with regard to agriculture advance, etc., with regard to IRACP norm. So short duration crop is harvest within 12 months. This question they asked. So we know it is 1 crop season and 2 crop season. Then what is a short duration crop for IRAC norm? Harvest within 12 months. Okay, harvest more than 12 months is a long duration crop. Question number 34. Though the liability continues to be more than the limit sanctioned, even beyond 90 days. Okay, I told you when the liability continues to be more than the limit for 90 days, at the end of the 90th day, an OD/OCC account will be classified as NPA. Here you see, though the liability continues to be more than the limit sanctioned even beyond 90 days, so long as there is no erosion in margin, loan sanctioned against which of the following security need not be classified as NPA. So liability is more than the limit, but still the erosion in the margin has not, you have a margin, no VSL. So 90% loan you will give, 10% is the margin. Even though, for example, you are given only 70 lakh, your margin is 10%, 90 lakhs loan you can give, but you are given a loan only 70 lakhs. Your margin is only, that is 10%. Up to 90 lakhs you can give, but you are given only, that is 70 lakhs loan. So even though, let us assume the borrower has not serviced the interest, the liability has become beyond 70 lakhs. Even though the liability is more than the 90 lakhs, 75 lakhs, 70 lakhs, even though it is beyond 90 days, the account need not be classified as NPA as long as the margin erosion has not taken place. So what type of advances? Loans against NSC, loans against LIC policy, Kisan Vikas Patra, bank deposits, and government deposits. All of these. In all these cases, even though the liability continues to be more than the limit even for 90 days or beyond 90 days, these accounts need not be classified as out of order or NPA as long as there is no erosion in the margin. So question number 34, answer is F. They may ask for 2 to 3 or 3 to 4. Question number 35. Question number 35. So this is also a very important question. They asked for 3 to 4 sometime back. In a central government guaranteed account, principal and interest becomes overdue for more than 90 days. You know, in the case of a term loan, if the overdue is more than 90 days, you have to classify as NPA and you have to keep provision. And not only that, interest from what is an NPA? So you have to keep provision, and interest from this NPA account will not be booked in your income. These two things will happen. Now, what happens to central government guaranteed account? In the case of a central government guaranteed account, principal and interest becomes overdue for more than 90 days. But the central government not yet repudiates the guarantee. Central government has not yet told, I will not give the guarantee. Central government has not yet repudiated the guarantee. This account has to be classified as NPA, and all IRAC norms are applicable. Need not be classified NPA, but income from this account should not be recognized. It should be treated as performing asset, none of these. Friends, please understand, there are two types of guarantees, central government guarantee and state government guarantee. Now let us see the central government guarantee. If there is a central government guaranteed account, if the account becomes overdue, that is, there are no installments are not paid even beyond 90 days, that is even on the 91st day. So as long as central government has not repudiated the guarantee, these accounts need not be classified as NPA and provision need not be kept. However, the interest from these advances should not be recognized as income. IRACP norm, I told you, no, income recognition, asset classification. When there is a central government guaranteed account, a term loan, even beyond 90 days, if there are overdues, this account need not be classified as NPA and provision need not be kept. However, interest from this income in this advance should not be recognized as income. So two things, you need not classify as NPA and you need not keep provision. However, income from these advances should not be taken as income as long as central government has not repudiated its guarantee. So for question number 35, answer is B. Need not be classified as NPA, but income from this account should not be recognized. This advantage is applicable only for central government guaranteed accounts. As far as the state government guaranteed accounts, normal NPA provisioning norm will be applicable if the account becomes overdue beyond 90 days. So this is applicable only for central government guaranteed account. Question number 35, answer is B. Question number 36. What is correct with regard to lodging criminal complaint with regard to willful defaulter? Friends, who is a willful defaulter? You know. So he has taken loan from the bank and he is generating sufficient income to repay the loan. He is not repaying, or he has siphoned off the money that is from the banking system, or he has created some other assets, or he has siphoned off to the sister concerns, etc. So these borrowers are called willful defaulters. Now, what is the liability to classify a borrower as a willful defaulter? So, what is the liability in the account should be? So, there is no restriction. Only if the liability, we are always having the notion, only if the liability is 25 lakhs and above, the borrower has to be classified as a willful defaulter. Even when the liability is less than 25 lakhs, you can classify the borrower as a willful defaulter. Then what is the 25 lakhs we are seeing somewhere? That is to report the borrower as a willful defaulter to credit information companies on a monthly basis. You know, you have 3 credit information companies or 4 credit information companies like CBIL, Equifax, etc. To report a borrower to a credit information company, either on a monthly basis or lesser than monthly basis, then the liability should be 25 lakhs and above. If the liability is less than 25 lakhs and above, you can classify the borrower as a willful defaulter. Who has the authority to classify a borrower as a willful defaulter? Either branches or circle offices do not have power to classify a borrower as a willful defaulter. If the branch wants to recommend, they have to recommend to RO or CO. In turn, it will be recommended to head office. Head office, there is a committee who will look into it whether the account to be classified as a willful defaulter or not. They will send a notice to the borrower asking them to give certain explanation within 30 days from the date of receipt of the notice as why he should not be classified as a willful defaulter. If the borrower gives a reply, the bank is satisfied, he will not be classified as a willful defaulter. If the borrower is not given a reply, if the bank is not satisfied with the reply, then the committee will decide the account has to be classified as a willful defaulter. Once the account is classified as a willful defaulter, and then the accounts to be reported as to credit information companies if the liability is 25 lakhs and above. Less than 25 lakhs, you need not report to the credit information company. Then what is the fine for the willful defaulters? See, now you are classified, the borrower is classified as a willful defaulter. Next month, he pays all the dues. He has removed from the willful defaulters list. Once the name is removed from the willful defaulters list, from the date of removal for the next 5 years, the borrower and the promoters, no financial institutions will give any advance to them. See, from which date? From the date of removal of their name from the willful defaulters for the next 5 years, no finance will be given to them. That is a penalty for the willful defaulter. Now, what is the question? What is correct with regard to lodging criminal complaint with regard to willful defaulters? Liability of 25 lakhs and above up to 3 crores, criminal complaint can be lodged with state CAD, economic offences wing of the state. That is correct. Liability of rupees 3 crores and above up to 25 crores, CBI economic offences wing. That is also correct. Liability of more than 25 crores with CBI banking security and fraud cell. All of these. So all of these are correct. Which is correct? Question number 36, answer is D. Question number 36, answer is D. Question number 37. Banks can publish only the photographs of whose photographs bank can publish? All defaulting borrowers with permission of the board of directors, all borrowers, all willful defaulters. If any bank, as per Reserve Bank of India guidelines, if any bank wants to publish the photograph of a borrower, so he should be first classified as a willful defaulter. So the liability can be 1 lakh or the liability can be 100 lakhs, whatever may be the liability. If the bank wants to publish the photograph of a willful defaulter, so the bank wants to publish the photograph of a borrower, first he should be classified as a willful defaulter. So all willful defaulters photograph banks can publish. So reporting to credit information companies 25 lakhs and above. Similarly, lodging criminal complaint 25 lakhs and above. But publishing the photograph, irrespective of the liability, banks can publish, but they should be classified as a willful defaulter. Coming to Canara Bank, question number 38. So question number 37, answer is D. Question number 37, answer is D. Question number 38. To publish the photographs of a willful defaulter in our bank, the liability should be rupees 10 lakhs and above. So after so I told you to publish any willful defaulter's name and photograph can be published in the newspaper. In Canara Bank, so RBI says willful defaulter. So in Canara Bank, if the liability is 10 lakhs and above, and if he is classified as a willful defaulter, his photograph can be published after getting permission from the DGM of the circle office. Okay. And question number 39. Question number 38, answer is 10 lakhs and above. Question number 39. How much time to be given to willful defaulters to clear the dues, as otherwise bank will indicate the intention to publish the photographs? I told you, 30 days. Question number 39. Answer is B, 30 days. In connection with the sale of NPA. Okay, now we have seen certain points on the willful defaulter. So over and above this, I told you, so who is a willful defaulter and what is the punishment for a willful defaulter? And when you publish his name in the newspaper, when you inform the names to the as a logic criminal complaint, and when the liability is above how much only you have to report to credit information companies, the periodicity is either monthly or lesser frequency also. So these are the questions on willful defaulter besides these questions. Then now we are going to so banks in connection with sale of NPA between banks, which are the following statement is not correct. See, if the account becomes NPA, if the bank wants to sell it to another bank, the bank can sell this NPA to the another bank and they get the liability cleared. Some banks are prepared to take the NPA from you and increase the advances. They have follow-up mechanism to recover the NPA. Okay, so in connection with sale of NPA, in connection with sale of NPA between the banks, which is not a correct statement. So which is wrong. What RBI guideline says? Selling bank can sell only 12 months old NPA account. So if the account becomes NPA, so it is told you have to wait for 12 months. After 12 months only, you can sell the NPA to other bank. Point number 2. Purchasing bank can sell the accounts after keeping it for 12 months in the bank. So one bank has purchased from the other bank. So the purchasing bank should keep it in their books for 12 months before selling it to another bank. Point number C. In the books of the purchasing bank, it will be treated as standard asset for the first 90 days, and then asset classification will be based on the record of recovery. Point number D. Buying bank shall assign risk weight of 100% for capital adequacy purpose for this account. Point number E. The banks which sold their NPA should not buy back the same NPA. So out of this, which is not correct. See, point number B to point number E all are correct. See, point number A is wrong. So selling bank can sell only 12 months old NPA account. No, that is not that. For example, in Bank X, the account becomes NPA today. Tomorrow itself, Bank X can sell it to Bank Y. There is no question of selling bank should keep a lock-in period. Afterwards, only the NPA has to be sold to the other bank. On the other hand, let us assume Bank X sells NPA to Bank Y. So today the account becomes NPA. Tomorrow the account can be sold. So after purchasing, Bank X has sold to Bank Y. Bank Y, it can also sell it to another bank. The purchasing bank should keep in its books for 12 months of the NPA. Then only it can sell it to another bank. So A is not correct. B is correct. Purchasing bank shall keep only after 12 months. In the books of the purchasing bank, it will be treated as standard asset for 90 days. That is also correct. Then asset classification, then after 90 days, depending upon the record of recovery, so the asset classification will take place. Then buying bank shall assign risk weight of 100% on the capital adequacy. That is also correct. The banks with sold the wait the banks which sold the banks which sold their NPAs should not buy back the same NPA. So all are correct. Point number A is not correct. Point number A is selling bank can sell the NPA without any lock-in period. Okay, sir, if they ask this question, we should not miss. Question number 41. Now we are going to see the recovery agents, appointments of recovery agents and resolution agents. If you see the slide, then we see the question, you'll get the answers. So quickly, we have to finish this today. SARFAESI action, we can go because recovery agents, resolution agents, they're asking the question. SARFAESI action, we can go next day. So next class. Now that is also very important. So then we will see your policy on that is recovery agents. Okay, policy on recovery agents, resolution agents. Once you see the slide, the questions you can easily answer. These questions are being asked by IBBS. One, Right. So now we are seeing policy on recovery agent, just another, that is, you may 35 minutes, please bear with me. So I know it is a holiday and this is a Christmas and all of you, some of you may be hungry also. So quickly we'll go through it. Policy on recovery agents. There are three categories. Recovery agents are classified in the bank three categories. Persuasive method, who are recovering without giving any force or seizure, etc. So retired government employees can be appointed as recovery agents for go and talk to the borrower, meet them and get the loan closed. That is called persuasive method. So retired employees of public sector units, including public sector banks, okay, including our bank. So all these retired the government employees, retired employees of the public sector unit, retired employees from the public sector banks, including our bank, individuals can be appointed as recovery agents under persuasive method. Okay. Then other types of agents can be appointed for seizure of vehicles, tractors, etc. So either individuals can be appointed or a agency can be appointed for that. Then the agency will send their people. So that is three categories. Persuasive method, you have appoint only these types of individuals. So other than these types of individuals, you can appoint for seizure of vehicles, tractors, etc. They can be other than these persons or they can be some agency also. So these people will be employed only recovery under persuasive method. So other than persuasive method, for seizure, etc., you can appoint individuals or through an agency as recovery agent. Then the third category, third types of recovery agents, that is that is okay. The second type also will do the first job also, leave it. So that is, but mainly to the seizure. So that is what I am telling is persuasive method. These people secure the seizure of the vehicle other than these people or agency. So that is the second two people can do the persuasive method also, but generally the second people will do only the seizure of tractors, etc. Then the third type of recovery agents are SARFAESI recovery agents. So under the recovery agent policy, you have for persuasive method and you have for seizure and you have for SARFAESI recovery agents. Three categories. Okay, sir, good. Then recovery agents, whatever may be the category, recovery agents, the three categories I told you, recovery agents to undergo training conducted by Indian Institute of Bank and Finance for 100 hours. That is the first point. Then what is the exception? If they are retired employees of public sector banks only, not retired government employees, not retired public sector unit employee. If they are retired public sector bank employees, including our bank employees, then they need not undergo 100 hours of IIBF training. They will give the following, which is the odd man out, or which is the correct statement. So one, public sector employees, retired public sector employees need not go under, there is public sector bank employees need not undergo 100 hours training. Public sector unit employees retired need not undergo. Government retired employees need not undergo 100 hours. The correct point is public sector bank retired employees only need not go the 100 hours training. Permission for circle head to be obtained for empanelment of the recovery agents. If agents do not sign the agreement within 6 months of their empanelment, that is empanelment stands cancelled. Then, what is the earnest to money deposit, security deposit? The recovery agent, three types of recovery agents I told you. The recovery agents have to give an earnest to money deposit to the extent of rupees 1 lakh, either LSC or surrender value of the LIC policy or deposits, anything they can give to the extent of 1 lakh. On the other hand, retired government employees, retired public sector unit employees, or retired public sector bank employees, including our bank, if they keep 50,000 rupees as the earnest money deposit, that is sufficient. Okay, that is the second point. Then the period of agreement for the recovery agent is 2 years. So may be continued for after 2 years, or they may be discontinued. So the period of agreement is for 2 years, may be continued for another 2 years. And besides these recovery agents who are empaneled by the circle, head office also empanels recovery agents. Head office empanel companies, limited liability partnership, NBFs, etc., who have all India presence to recover as recovery agents pan India. They are considered as recovery agents pan India. If it is so, then the earnest money deposit they have to deposit is 5 lakhs. Here, the three types of recovery agents who are empaneled by the circle, the earnest money deposit is 1 lakh. So in that case, government retired employees, etc., only 50,000. It is for 2 years, maybe extended for another 2 years. Suppose if head office there is empanels pan India recovery agents, then the earnest money deposit they have to deposit 5 lakhs. So it can be reduced to the maximum extent of 50% by executive committee CAC, credit approval committee. Credit approval committee headed by executive director can reduce for pan India recovery agents EMD to be reduced to 50% of the 5 lakhs. Then who has to entrust the job to the recovery agent, or who had to entrust NPA under doubtful, loss and return of accounts with book liability up to 15 lakhs per account can be entrusted to the recovery agent. Very, very important. Doubtful asset, loss assets, return of assets per account liabilities up to 50, less than 50 lakhs that will be entrusted by the RO head through the branch to the recovery agent. Beyond 50 lakhs, suppose if the that is you want to entrust a that is account to a recovery agent where the liability is beyond 50 lakhs, then circle head only has to give consent for that. In the other question, you should not miss it. Which is an word man out, which is not correct, which is not correct. Recovery agents, RO heads will give the accounts with less than 50 lakhs liability. So RO heads, if it is beyond 50 lakhs, the circle head has to give to the recovery agents. What type of accounts you will give to recovery agents? Doubtful assets, loss assets, and return of accounts. Even substandard accounts also can be given to the recovery agent, provided the substandard account remains in the category for a minimum period of 6 months. Up to 6 months, a substandard asset cannot be given to the recovery agent. Beyond 6 months, substandard up to 12 months it will be there. Beyond 6 months, the substandard account can be given to the recovery agent. The recovery agent should not collect cash. Then, suppose if the recovery agent has decided to seizure the vehicle, so everything is ready, he is going to seize the vehicle, then bank has to send a notice to the borrower giving 15 days time. Before seizure by the recovery agents, 15 days notice to be given to the borrower by the branch ROCO. So and so are the recovery agents. They are going to come and seize your vehicle if you are not repaying the loan within 15 days. The notice to be given to the borrower. So if they ask what is the number of days of the notice to be given, 15 days, not 30 days. Normally it is 30 days. Here only 15 days. Then suppose the recovery agent seizes the vehicle and it is kept in the bank custody. Bank is going to sell the item either through SARFAESI or through some other sale. Then before effecting the sale, 15 days notice to be given to the borrower. So we are seized the vehicle. We are going to sell the vehicle. 15 days notice to be given. Okay, these points are taken from your recovery policy, HO Circular 147 by 2022, policy on recovery agents. Any questions they will get. That is why wherever the numbers are there in the circular, no, beyond 5 years, up to 50 lakhs, what type of assets, these questions IBPS people will catch and ask you. That is why those important points I have made in my presentation. Twice if you go to my presentation, you can answer any question in the recovery agents. Then grievances against the recovery agent. Who has to address the grievances against the recovery agent? So there is a cell at circle office. The head of the cell is DGM or GM of the circle. So anybody has a grievances against the recovery agent, they can write a letter to the cell in each circle office. The head of the cell is the DGM or GM of the circle is the head of the cell. They can write to be redressed. The grievances of the recovery agents given by the borrower to be redressed within 30 days. Very important. Within how many days the grievances to be redressed? Within 30 days. What is the fee schedule payable to the recovery agent? This question they are asking. Okay, see, complicated. Different types of fee schedules for different types of recovery agents. But once, twice, if you go through, no, you will understand. You will keep in your memory. The substandard asset, I told you. For recovery agents, ROAs can interest, doubtful, loss, return of assets, liability up to 50 lakhs. Above 50 lakhs, circulate will interest. In the case of a substandard asset, if it is continuous to be for a period of 6 months and above, that also can be entrusted to the recovery agent. Suppose if the recovery agent recovers a substandard asset, what is the any recovery in the substandard asset, you will give 3% of the amount recovered as the recovery agent under persuasive method. I told you three methods, no? Three types of recovery. Persuasive method recovery agent, then seashore recovery agent, then SARFAESI recovery agent. Under the persuasive method, if recovery has come, and if it is a substandard asset, I told you when you can entrust a substandard asset and what type of liability, which authority can entrust to the recovery agent. If it is a substandard asset and 3% of the amount recovered under the persuasive method, fee can be paid to the recovery agent. If it is a doubtful asset, 5% of the amount recovered. Loss or return of accounts, 10% of the amount recovered. Maximum per borrower, you can give only 5 lakhs per recovery agent. Maximum per borrower, you can give 5 lakhs as the fee under this persuasive method. If the borrower settles the account under OTS due to efforts of the agents, then 50% of the above fee will be paid. So what is the fee payable to the recovery agents? Substandard 3% of the amount recovered, doubtful 5%, loss or return of 10%. Maximum per account, you can give 5 lakhs to the recovery agent. Suppose if the recovery agent brings the borrowers for OTS purpose, and because of the persuasive OTS is settled, amount is paid, then you cannot pay 3%, 5%, 10%, 50% of the amount, maximum 2.50 lakhs, you can pay per borrower to a recovery agent. Okay, sir, this is under persuasive method. The next point. So normally for the recovery agent, only 5 accounts will be entrusted. 5 accounts will be entrusted, and this is the fee you will pay. So when amounts are recovered, suppose if the recovery agents are efficient, if the RO or CO fee feels more than 5 accounts, we will entrust to the recovery agent. That is also permitted. So what the fees you have to give? Recovery agents up to 5 borrowers account given, you will pay the normal fee. If the borrowers or accounts are given more than 5 accounts up to 10 accounts per borrower, you can give additional 5% on the fees, which I told you in the previous slide. If the number of borrowers account, number is not accounts, number of borrowers. If the borrowers given to the recovery agents is more than 10 up to 15, and if they recover, you can give additional fees of 10% over and above what I have told in the slide. So maximum 15 borrowers can be entrusted to a recovery agent. The above is called step-up fees. Up to 5 borrowers, normal fee. Above 5 borrowers, up to 10 borrowers, additional 5% fee. Above 10 borrowers, up to 15 borrowers, additional 10% fee. So beyond 15 borrowers, you will not give to a recovery agent. These additional fees, that is 5% or 10%, is called step-up fee. So I told you in the previous slide, per borrower, you can give maximum 5 lakh, subject to 3%, 5%, 10%. Suppose the step-up fee, when you are giving more than 5 borrowers up to 10 borrowers, or more than 10 borrowers up to 15 borrowers, you can give additional 5% and 10%. I told you, no, the additional maximum step-up fee can be 5 lakhs. There, 5 lakhs maximum. The additional step-up fee over and above the 5 lakhs, maximum can be 5 lakhs per agent, in addition to the normal fees up to 5 borrowers. Okay, sir. This is with regard to fees payable to recovery agents under persuasive method. Normal fees up to 5 borrowers, step-up fees above 5 borrowers, up to 15 borrowers. Okay, sir. Good. Then for seashore agents, so second category, for seashore agents, if they seize there is two-wheeler, you will give 2,000 rupees. And if he sees an auto, 3,000, car, jeep, tractor and light vehicle 8,000, bus, lorry and heavy vehicle, you will give 10,000 to the seizure agent. RO head and CO head may permit additional 4,000 rupees on a case-to-case basis in these cases. So this is the fees, very simple, payable to seizure agents. Then SARFAESI agents, I told you, the third category is recovery agents under the SARFAESI category. So this is the fees, pre-inspection, sorry. Pre-inspection, before they go take in possession, they go and make a pre-inspection. The minimum is 2,500, maximum 5,000. Obtaining order from district magistrate for taking possession. When the SARFAESI come, we will explain all those things. He will get 0.25% of the market value as per the valuation report or book liability, whichever list, minimum 10,000, maximum 3,000. These things you have to remember by heart only. That is assisting in taking possession and publication of possession notice. This is the maximum you will give to the recovery SARFAESI recovery agent. Minimum 2% of the reserve price or 5 lakhs, whichever is less. If recovery is made within 6 months, additional incentive of 0.25% of this reserve price of 1 lakh, whichever is less also can be paid to the recovery agent. So let's see the questions for the recovery agent. Then if time permits, we will come to SARFA, that is resolution agent. Quick sir, now you will be able to answer all the questions. See the question. Question number 41. Question number 41. The recovery agents, other than retired employees of public sector bank. Oh, sorry, other than retired employees of the public sector bank or retired government employees or retired public sector units have to deposit rupees 1 lakh as the EMD. If the recovery agents are appointed pan-India, then they have to pay 5 lakhs as the EMD deposit. How much it can be reduced from the 5 lakhs? 50% can be reduced. By whom? EDCAC. Okay, question number 41. From that, 2-3 questions you are derived. Question number 42. For question number 41, answer is rupees 1 lakh. If they are retired employees, then they have to keep 50,000 as the EMT, earned money deposit, caution deposit. Question number 42. For recovery of doubtful asset, loss and return of assets for more than 50 lakhs, our bank appoints. So up to 50 lakhs we have seen, no? Up to 50 lakhs we have seen. RO head can give, above 50 lakhs, selectively circle head can give. But however, when it goes for recovery of above 50 lakhs, normally we won't give to the recovery agent. Even though circle head can give above 50 lakhs to the recovery agent, when the account liability is above 50 lakhs, bank gives the recovery work to the agents called resolution agents. We'll go and see the policy later. So for question number 42, for recovery of doubtful loss and return of assets for more than 50 lakhs, our bank appoints resolution agents. Okay. The EMD for resolution agent. So I have not yet told that the earnest money deposit for resolution agent is rupees 5 lakhs. Resolution agent also it is 5 lakhs. All India, Pan India recovery agent also it is 5 lakhs. The EMD for resolution agent is 5 lakhs. Question number 44. Recovery agents other than the retired public sector bank employees have to undergo how many hours of training IIBF? Only public sector bank employees retired need not undergo the 100 hours training. Go public sector government employees, public sector unit employees retired have to undergo 100 hours of training conducted by IIBF. Question number 44, answer is B. Question number 45. NPA accounts under substandard category, asset category can be entrusted to recovery seizure agents if it is continuous in NPA for a minimum period of 6 months. I already told you, no, normally doubtful, loss and return of asset. If it is substandard, if continues for a period of 6 months and above, you can entrust to the recovery agent 6 months and above. Question number 45, answer is B. Question number 46. Which is not correct, which is the wrong answer, which is the odd man out, which is not correct with regard to fees payable to the recovery agents with a maximum of rupees 5 lakh. Normally up to 5 accounts you can interest, 5 borrowers you can interest. Above 5 borrowers, up to 10 borrowers, step up fee is 5% additional. Above 10 borrowers, up to 15 borrowers, step-up fee is 10% additional. The additional maximum can be 5 lakhs, isn't it? We already saw. Now the question is, which is not correct with regard to fees payable to recovery agents with a maximum of rupees 5 lakh. So substandard asset 3% of the amount recovered, that is correct. DA 5% of the amount recovered, that is correct. Loss and return of 10% of the amount recovered, none of these. All are correct, so none of these. Question number 46, answer is D. Very simple. Maybe for clerical to officer, this type of simple questions will come. So none of these. Then question number 47. So question number 46, answer is D. Question number 47. If accounts are settled under OTS through recovery agents, the fees payable to them is 50% of the normal fees. So answer for question number 47 is B. I already told you in the PowerPoint presentation, if it is brought and settled and payment has been made, OTS amount also should come. When everything is done, you have to pay 50% of the normal recovery fees as applicable to the recovery agent. 50%. Question number 47, answer is B. Question number 47, answer is B. Then question number 48. Which is correct with regard to payment of fees to the resolution agents. Okay, question number 48 we'll see later after seeing the PowerPoint presentation of resolution agent. Then this question number 49 we will see, sir. What is the fees payable to the SARFAESI agents for recovering heavy vehicles? I told you maximum fees is 10,000. Heavy vehicles, question number 49 answer is D. Circulate and RO head can permit additional 4,000 rupees on a case-to-case basis. Question number 49 answer is D. Then this is the last, this question has come out recently in HO circular, I think 574/2022 after RBI guideline. The recovery agents should not resort to intimidation of any kind, either verbal or physical, against any person, or call the borrowers before -AM and after -PM in the debt collection efforts as per HO circular 574/2022. You should not talk. The recovery agent should not threaten. The recovery agent should not pull their collar. The recovery agent should not talk some nonsense, but you have to recover. That is the bank's guideline. Okay. So what is the guideline? Which is the correct with regard to, the recovery agents should not resort to intimidation of any kind, either verbal or physical, against any person, or call the borrower before particular time and after particular time. So persuasive. Without the banks are not supposed to threaten, intimate, and do all these forceful over things. And then time norms are also given by RBI, certain time norms. So they should not call the borrower before 8 AM and after 7 PM. Before 8 AM, after 7 PM. So question number 50, your answer is C. Answer is before 8 AM and after 7 PM. This is not in your recovery policy. 147/2022 is recovery policy. Subsequently, you got the circular based on the RBI direction. So whenever the RBI directions are there, HO will bring out the circular 574/2022. These things are given before 8 AM and after 7 PM. The borrower should not be contacted by the recovery agents. Befor that, you should do it, but take care of the recovery, very important. Then question number 51, that is the investigating/deductive agencies are empaneled by the bank, question number 50, or empaneled by the bank for recovery of high value NPA accounts, the book liability of which is more than rupees 50 lakhs. So please take down question number 51. There are investigating agency or deductive agencies or empaneled by the bank for recovery of high value NPA accounts with book liability of which is more than 50 lakhs, 50. Question number 52. If the bank got reliable information that a borrower who is in default, is going to flee out of India, then it can request the Deputy Director, Bureau of Immigration, to open dash against the borrower, to open what is called a lookout notice. lookout notice. If you feel the borrower is going to flee out of India, then the bank can take up with the Director Bureau of Immigration to issue a letter. The letter is called lookout notice. Lookout notice against the borrower. Then these things also we see before we go to the resolution agent. With that, we'll wind up today. SARFAESI will take up in the next class. Lok Adalat are constituted under the provisions of what act? That they are asking. Lok Adalat are constituted under the provisions of, please note it down, Legal Services Authority Act 1987. Simple question. Lok Adalats are constituted under the provisions of Legal Services Authority Act 1987. Legal Services Authority Act 1987. What is a Lok Adalat? So bank will approach the judges of court, and these judges will come. It is not official sitting in the court. They will come in a place organized by the bank. The judges will come, bank officers will be there, and the borrower will be there. So after discussion, after mutual consent, the judge will say, you pay this money within this amount, within this period. So it is equivalent to a decree, but this decree cannot be appealed in a court of law. Lok Adalat. Lok Adalats will settle accounts. So that is NPA accounts, and the liability is less than 20 lakhs. Then we have a concept called DRT Lok Adalat. You call DRT judges. They will come and settle and these type of accounts and due to persuasive and agreement method, that is called DRT Lok Adalat. DRT Lok Adalat will settle cases beyond 20 lakhs. Less than 20 lakhs and above DRT Lok Adalat, less than 20 lakhs normal Lok Adalat. Okay. The Lok Adalats are constituted under the provisions of Legal Services Authority Act 1987. Please note it down. Legal Services Authority Act 1987. Orders passed by the Lok Adalats or consent decrees. Agreement, I told you, no, they are called consent decrees. Appeal to be made against the order in which court? Friends, please understand, it is only a consent decree. The judge is not passing an order. After agreeing only is giving an order. So it is called a consent decree. Nobody can appeal against the consent decree in any court. So you can appeal in civil court, it is wrong. High court, it is wrong. Supreme Court, it is wrong. Other than the options given above. The correct answer is other than the options given above, because orders passed by the Lok Adalats cannot be appealed in any court. So question number 54, answer is D. DRTs are established, that is debt recovery tribunals. DRTs are established. So I told you, Lok Adalats are established under Legal Services Authority Act 1987. DRTs are established under which act? Please note it down. DRTs are established under recovery of debts due to banks, recovery of debts due to banks and financial institution. Recovery of debts due to bank and financial institution Act 1993. So DRTs are established under Recovery of Debts Due to Banks and Financial Institution Act 1993. The short form for that is RDDBFI. Recovery of Debts Due to Banks and Financial Institution, or DDBFI Act, right? That is 1993. Question number 55. Question number 56. To make the debt recovery tribunals more effective and to facilitate fast disposal of debt recovery cases, the government has doubled the monetary limit of 10 lakhs and above that is monetary limit to rupees 20 lakhs and above. You know, earlier cases in DRT can be filed if the liability is 10 lakhs and above. Now, recently, 2-3 years back, if the liability is 20 lakhs and above, suits has to be filed in the DRT court. So, for question number 56, it is answer is A. Question number 56, answer is A. Then, what is the provision coverage ratio prescribed by RBI? You know, you have various types of provision, substandard, standard, then doubtful, loss, etc. Various percentage. The total provision coverage ratio bank should have, as per RBI guidelines, 70%. 70. So what is the latest provision coverage ratio of Canara Bank published in the balance sheet for September 2022? If they ask that question also, you should know, because September 2020 is the last balance sheet of the bank. So as per RBI guidelines, the provision coverage ratio prescribed by RBI is 70%. Canara Bank's provision coverage ratio for September 22 is 85.36%. 85.36%. So answer for this question is, what is the provision coverage ratio prescribed by RBI? 70%. Canara Bank September 2022 provision coverage ratio is 85.36%. Question number 5, that is 56 or 58 also we will see. All loan account, this is a quick mortality. Okay, what is a quick mortality account? Very important. All loan accounts of borrowers where the aggregate liability is 15 lakhs and above becoming NPA within 12 months from the date of, in respect of loans sanctioned to the concerned borrowers for the first time are defined as quick mortality accounts. Please understand, friends, quick mortality accounts. So the loans to be sanctioned to the borrowers for the first time in Canara Bank. You are not sanctioned any loan by any branch of the Canara Bank. First time you are sanctioning the loan. After sanctioning the loan, the account becomes NPA within 12 months. And at the time of becoming NPA, the liability of all the accounts of the borrower is 15 lakhs and above. So, first time loan sanctioned to a borrower in the bank, it becomes NPA within 12 months of which date, and at the time of becoming NPA, the liability in the account is 15 lakhs and above. So, first time borrower, when becoming NPA, liability is 15 lakhs and above, and the account becomes NPA within 12 months from which date. Whether it is account become NPA 12 months from the in respect of from the date of sanction, first disbursement, commencement of repayment of either interest or installment, any of the above. Friends, earlier originally it was first date of sanction, then it was first disbursement. Now today, the definition of the quick mortality is becoming NPA within 12 months from the date of commencement of repayment of either interest or installment. So it is not from the date of sanction, it is not from the date of first disbursement. Becoming NPA, at the time of becoming NPA, liability is 15 lakhs, and first time borrower from the bank becoming NPA within 12 months from the date of commencement of repayment of either interest or installment. From that date, within 12 months, the account is not recovered, the account will be called a quick mortality account. Question number 58, answer is C. Question number 59. The threshold limit for early warning signal and red flagged account is rupees dash million and above. It is 50 crores and above. 50 crores means, 1 million is 10 lakh, so 500 million. So the threshold limit for early warning signal and red flagged account is rupees 500 million and above, 50 crores and above. Okay, you note it, that is more than sufficient. So for question number 59, the answer is, that is B, 500 million. Then question number 60. The cutoff limit for reporting borrowers as non-cooperative borrower to Reserve Bank of India, the exposure should be 5 crores and above. The 5 crores and above, 5 crores is not there, then it is 50 million and above. Question number 60, answer is 50 million and above. I told you 1 million is equal to 10 lakhs. So the cutoff limit for reporting a borrower as non-cooperative borrower to RBI is 5 crores and above, which is 50 million and above. Question number 60, answer is A. Okay, question number 60, answer is A. Question number 61. The details of willful borrowers whose liabilities dash lakhs and above to be reported to credit information companies on a monthly basis or lesser frequency. I told you 25 lakhs and above. You can classify any borrower as willful defaulter, but for filing a case, criminal complaint, or reporting the willful borrower to the, that is credit information companies on a monthly or lesser frequency, you should be 25 lakhs and above. So if they ask what is a periodicity, monthly or lesser frequency. Earlier it was quarterly. Earlier we are submitting separately the willful defaulters to Reserve Bank of India also. Now it goes under the CRILC report. Now it goes under the CRILC report, but the credit information companies, you have to submit on a monthly or lesser frequency when the liability is 25 lakhs and above. So question number 21, answer is B. Question number 21, answer is B. Sorry, question number 61, answer is B. Question number 62, a recovery call center of the bank is situated where? Recovery call center of the bank is situated in National Games Village, Koramangala, Bangalore. So recovery call center of the bank is situated in National Games Village, Koramangala, Bangalore. What this recovery call center does? Next question. Recovery call center, you see, calls are made from the call center to certain customers, which is the odd man out. So which type of customers calls are not made? That is the question, which is not correct. So recovery call center is situated in National Games Village in Koramangala, Bangalore. The people who are sitting there will make calls to certain types of borrowers. For what type of borrowers the calls are not made, which is the odd man out. NPA borrowers with liability up to 1 crore. With book liability up to 1 crore, call is going from the call center. OTS settled accounts to remind the borrowers for timely payment of the OTS amount. Yes, for them also call is going. Follow-up calls to successful bidders through e-auction under the SARFAESI Act. Yes, you have become a successful bidder. Please pay the money and take back your security. Okay, that is also calls are going. SMA to borrowers, informing them to pay the critical overdue amount to avoid slippage. No, for SMA to borrow, SMA 0, SMA 1, SMA 2, calls are not going from the from the recovery centers of the National Games Village. It is going for follow-up of NPA account less than 1 crore, then OTS settled parties, and then SARFAESI successful bidders. So which is the odd man out? D is the odd man out. So D is the odd man out. Question number 63, answer is D. Question number 64. Another 4 minutes I will finish, friends. So recovery committee, this question was asked last time. Recovery committee at circle office shall review individually. So recovery committee at circle office. Question, I think, yes, question number 64. Question number 64. Recovery committee at circle office shall review individually the account with liability above slip to NPA subsequent to the last review. So the recovery committees has to meet at least once in a month. So last month, which are all the accounts slipped as compared to the previous meeting, if the liability is 10 lakhs and above, if the liability is 10 lakhs and above, recovery committee at circle office should individually review those accounts. Question number 64, answer is B. Similarly, we have a recovery committee at regional office. Recovery committee at regional office shall review individually the accounts with liability of rupees 2 lakhs and above slipped to NPA subsequent to the last review. Question number 65, answer is A. Question number 65, answer is A. Question number 64, it is answer is B. Okay, question number 66. What is the periodicity of the meeting of the recovery committee ROCO? Minimum once in a month. At least once in a month, the recovery committee has to meet. Question number 66, answer is A. Question number 67. The proceedings of the recovery committee at RO to be submitted to the circle office and that of the circle office proceedings to be submitted to HO within how many days of conducting the meeting. So within how many days of conducting the meetings, the proceedings has to be submitted within 7 days. Okay, question number 67, answer is A, within 7 days. Then question number 66, wherever securities, immovable properties are sufficient to cover the contractual dues, branches shall at the time of filing DRT case, I told you, DRT cases can be filed if the liability is 20 lakhs and above. At the time of filing the DRT case, if the securities or immovable properties taken as collateral securities are sufficient to cover the liability, branches at the time of filing DRT case engage the detective agency in all the cases where the book liability is 50 lakhs and above to identify other assets of the borrower's guarantors and note to file ABJ before the DRT. Friends, you know, 20 lakhs and above liability to be sued to be filed in the DRT court. So at the time of filing the DRT court, if the bank has found out that is the borrower is having other liability, other securities also, other properties also, How the bank will find out if the liabilities that is 50 lakhs and above in the account at the time of filing the DRT suit, bank can engage the detective agency and find out so what are all the other assets the borrower is having. And then at the time of filing the DRT suit, bank also has to ask for attachment before judgment. So what do you mean by ABJ? The bank will tell this is our liability, this is our security. This security is put as mortgage to us. We find out the borrower is having other types of securities also. Kindly attach that security in our favor before you give the judgment for this case. So that is called attachment before judgment. So engage the detective agency in all the cases where the book liability is 50 lakhs and above. Question number 68, 50 lakhs and above. Question number 69. Okay. So from question number 70 onwards is the SARFAESI Act. We'll be going to take up only the next session. With question number 69, we'll wind up today. Resolution agent policy, I'll see the PowerPoint person. We'll see it next class. Crown debts. What do you mean by a crown debt? Crown debts do not have priority over the dues of the secured creditor, provided SARFAESI registration is made prior to the top secured creditor. Friends, SARFAESI. So SARFAESI, that is additional provisions available to the bank to create the charges. So whenever you are taking, that is securities under mortgage, whenever you are taking securities under hypothecation, SARFAESI registration to be done in the SARFAESI side. Okay, when the SARFAESI registration to be done on the same day of loan sanctioning or account opening, on the same day, you have to do the SARFAESI registration. Earlier, within 30 days, you can do. Beyond 30 days, up to 45 days, etc., up to 60 days, you can do by paying certain fine. But now that concept has been dispensed with. SARFAESI registration to be done on the same day of account opening or on the same day of loan sanction. So first you do the SARFAESI search report. Then after the SARFAESI search report indicates no charges have been made against the security for which you are going to take and give the loan, you sanction the loan, and before releasing the money, you do the SARFAESI registration in the SARFAESI site. Okay, now the question is, for example, not only banks, earlier, only banks are supposed to do the SARFAESI registration. Now, not only banks, for example, if the income tax attachment order is coming against an individual, or income tax attachment order is coming against a company, or court attachment order is coming, garniture order is issued, for all these things also to be registered in the SARFAESI site. Not only the secured creditor, who is a secured creditor? Bank. Earlier, bank only will do the SARFAESI registration. Now, government authorities also, whenever enforcement directorate or income tax authority or GST authorities or court authorities, whenever they are attaching a security, they should also do a SARFAESI registration. Suppose on same property, so bank is doing SARFAESI registration, government is also doing SARFAESI registration. Then we have to see who has done the SARFAESI registration first. If bank has done the SARFAESI registration, even though income tax authorities had an attachment but they did the SARFAESI registration subsequently to bank registration, bank will get the priority. So the debts of the government. What do you mean by crown debt? The debts due to the government, that is the debts due to by your borrower to income tax people, enforcement people, court, it is called the crown debts. So what is crown debts? Exact answer for crown debts: amount due to various statutory authorities is called the crown debts. So if the statutory authorities do the SARFAESI registration first, they will get the priority. If you do the SARFAESI registration first, you will get the priority. Earlier, so in spite of your registration, EMT, etc., if there is a court order or if there is a government order, they will get the priority. Now that has been changed in the SARFAESI. They are also asked to do the SARFAESI registration. If the secured creditor, if bank does a SARFAESI registration prior to the crown debts, the government authorities, bank will get the priority as compared to the crown debts. Crown debts means amount due to statutory authorities. amount due to statutory authorities. So 4 minutes I have taken more. With that, we will wind up the session, friends. So we will meet in the next class. We will go to the SARFAESI action. Then the resolution agents policy also in the presentation and explain to you. Then we'll go to the OTS policy of the bank. With that, we wind up. Today, I think afternoon session, you have the afternoon session. Mr. Ravikumar will be taking from somewhere. So please attend the session also. Thank you very much.
Sir, thank you, sir. Sir, thank you.
Thank you, thank you.
என்ன ஒரே ஸ்ட்ரெச் அடிச்சிட்டீங்க.
ஆமாமா, பின்ன இது இன்னும் 2 கிளாஸ் ஓடும். சர்ஃபாசி ஓடும்.
SARFAESI.
அதுக்கப்புறம் வந்து OTS பாலிசி இருக்கு. 147 is a very big circular.
Okay.
Very big, sir. Very important questions are particularly SARFAESI, you know, many questions for all the levels it will come.
Yes. Sir, காஃப் இன்னும் சரியா இல்லையா?
இல்லம்மா, அது திடீர்னு வருது.
Okay.
Okay, நீ மத்தியானம் கிளாஸ் இருக்குல்ல?
2 o'clock இருக்கு சார்.
That's why I stopped at 1 o'clock. Okay, 3 hours is sufficient.
Yes, sir.
Okay, we will meet in the next class.
Okay, sir. Thank you, sir. Friends, we will have a break. Please join us with at 2 o'clock.